Recording in progress.
Hello. Hello, everyone. Can you hear me? All right. Welcome, everybody. I know we are a few minutes late, actually a lot late, but I would like to start by apologizing for us being late. I will just start by saying welcome to everybody to this event. Anybody who wants to come up front, you're all welcome to sit up front and enjoy the program. We will be starting in a few minutes. We're just waiting for some people to head in. So formally, I would like to apologize for being late, and then we'll start in a few minutes. I hope your trips were great. So please talk among one another, and we'll start in a few minutes. Thank you very much. Hello, everyone. Welcome again. Good morning, distinguished guests, excellencies, colleagues, and partners. It's a real pleasure to welcome you all on this private sector forum side event as part of the 12th session of the African Regional Forum on Sustainable Development. My name is Wengil Tamene, and I will be your moderator for today, so welcome everybody. We are gathered under the theme Forward Faster, Scaling Private Sector Partnerships to Accelerate the SDGs in Africa. Now, today, it's really about moving things forward in practical ways. Yeah. Beyond the conversations, the question is, how do we translate this into real progress? So throughout this session, we'll be focusing on a few key things. What is already working on the ground, how financing solutions are actually being structured, and most importantly, how can we move forward from where we are today to tangible progresses over the next 12 months. It is now my pleasure to invite Mrs. Ngoni. I think I might have, it's a last minute change, so let me invite our first speaker. Give me a few minutes. Okay, Ngoni Diop, Director for the Sub-Regional Office of ECA in West Africa. Welcome, Ngoni.
Good morning. Thank you, Madam Moderator. I hope you can hear me. Thank you. Thank you very much, Madam Moderator. Honorable official, I know we have many of you from across Africa, distinguished member of the private sector, civil society, and many colleagues from the UN, especially UNDP, United Nations Compact, but also we have our private sector partners. AID stands for International Institute for Environment and Development, and many more. And of course, you, entrepreneur, here in the room and online. I would like first and foremost to acknowledge our member state, officials from different African countries, and I would like to warmly thank them very much on behalf of the Executive Secretary, Under Secretary General, and Executive Secretary of the ECA, the United Nations Economic Commission for Africa, His Excellency Mr. Clave Getete. I would like to warmly not only welcome you, thank you very much for your time and for your commitment, for your presence here. And as you know, we gathered today this morning under a timely and important theme on the margin of a very important forum, which is the African Regional Forum for Sustainable Development, bringing us all together to deep dive into the progress we are making toward achieving the SDG, the global goal. As I said, we gather under a timely and important theme, forward fasting, scaling private sector partnership to accelerate the SDG in Africa. This theme speaks directly to the challenge before us. Africa development ambitions are very clear indeed, but the scale of financing, innovation, and delivering required cannot be met by current public resources alone. The private sector is not only a source of capital, it is a key driver of job, technology, value chain creation, industrial transformation, and practical solution in the sector that matters most to our countries, but to our population. namely energy, water, infrastructure, cities, agriculture value chain, finance, but also digitalization, which is key to innovation, and the growth of entrepreneurship, businesses, be it local, national, and regional. Today's forum has therefore been designed to move us from dialogue, be it fruitful dialogue, conversation, to solution. Solutions that are urgent, solutions that matter to respond to the challenges we're facing. Of course, in any challenges, we have magnificent opportunities. Harnessing those opportunities is critical, and that's why we are here collectively to deep dive into what we could do together. We begin, therefore, by taking a frank look at what is working and what is not working. Very important to ask such questions. Because as we said, we want to speak to the key issues, key challenges, but also identifying and unlock magnificent opportunities. We will then examine financing instruments, including blended finance, guarantees, debt swap, and risk-sharing structure that can help mobilize investment at scale. And now, most importantly, we'll end with a leadership exchange focused on priority reform that are needed and now, partnership pathways, and concrete solution for the next 12 months. So we're not talking about next year, in 2 years or 3. It's now, action and now. I therefore would like once more to thank very much our partner, co-convener of this very important private sector forum, namely the United Nations Compact and UNDP, as well as all business leaders. We have the blended finance, as I said, and we have all of you innovators. We have all of you who are actually designing what it takes, what is needed to move the whole process forward in a very concrete and impactful way. Colleagues, leaders in the business ecosystem, we would like to invite you to be, let's say, practical. Practical with practical solution. Practical mindset, because we have all the narrative, we have all the policy framework, we have all the analysis. But now let's be practical. Let's be concrete, yet strategic. Let's be solution-oriented for impact. Let's just identify where capital can move, where partnership can deliver, and where policy and financing can work together to accelerate change, to accelerate transformational change and sustainable development, anchored in Agenda 2030 of the SDG. With that, I warmly again thank you for your partnership, for your presence here, and I wish you a very productive private sector forum. I thank you.
Thank you, Director, for setting the tone so clearly. As we move into the program, let me take a moment to briefly frame how today is going to unfold. When we talk about Africa's SDGs challenges, it's not really about ambition. We all agree on that. The real question is, how do we execute and how do we do it in scale? Because the reality is we're still seeing some familiar constraints. A persistent finance gap, investment pipelines that aren't always fully aligned, and coordination challenges across sectors. At the same time, though, many of the solutions are already there. We're not starting from scratch. So today, it's really about building on what is existing, and pushing it further. We'll structure the conversations around this three things. First, taking a practical look at what is already working, then exploring how financing solutions are actually being structured, and then finally, focusing on what kind of leadership and action is needed to move things forward from here. So we'll now move into our fireside chat. This is really an opportunity to ground the conversations in practical experiences, what it actually takes to move from ideas to implementation. So we'll be hearing from Mr. Darrabe Asfaw, CEO of Cooperative Bank of Oromia, in conversation with Mr. Hervé Lado from the UN Global Compact. So please join me in welcoming them to stage. Thank you very much. I'll give the next session to you.
Hello. Hello. Not sure it is working. Hello. Can you hear me? Sorry for this. Thank you very much, dear moderator. And it is really my pleasure to welcome here Mr. Darrabe Asfaw, the CEO of the Cooperative Bank of Oromia. Actually, the Cooperative Bank of Oromia is a well-known banking institution here in Ethiopia. It is a leading bank institution created in 2005, and you were celebrating in March the 21st anniversary of the bank. The bank serves over 15 million clients, and with over 10,000 employees, and with revenues of over $600 million. And the bank has a strong focus on mobile and digital banking solutions. Coop Bank was actually recognized this year, last year in 2025, by MasterCard as the top performing farm partner in Africa, recognizing the bank's effort to digitally transform Ethiopia's agricultural sector. The bank also works a lot with MSMEs, micro and small and medium enterprises. In 2025, also last year, the Coop Bank was named the Sustainable SME Financier of the Year at the 2025 Global SME Finance Forum in Johannesburg by the UN's ITC, International Trade Center. And Mr. Asfaw is not only the CEO of the Cooperative Bank of Oromia, he's also a member of the Africa Business Leaders Coalition, a coalition of over 75 top African business leaders representing over $175 billion revenues, 1 million employees, and with operations in more than 50 countries in Africa. ABLC, Africa Business Leaders Coalition, was set up by the UN Global Compact in 2022 at the COP in Egypt to champion climate action in their businesses as well as on African and global stages. Since 2024, ABLC also champions gender equality across the continent. Thank you, Mr. Asfaw, for making the time today. When I met with you in your office last year, you were very proud of the journey of the Cooperative Bank of Oromia, because you were saying we started this journey really anchoring the business of the bank into the African cultures. And that when we are talking about the SDGs, it is really also talking about values and principles that support our journey since the beginning. Can we say, Mr. Asfaw, that the SDGs are in the DNA of the Cooperative Bank of Oromia?
Thank you, Dr. Lado, and I really appreciate for having me on this important forum. As you said, we are at a turning point where the globe has designed sustainable development goals, and Africa has set an ambition to sustain this development and set a vision for 2063. At the bank, as you said, the sustainable development goal is within our DNA because of two things. We have a philosophy behind the GADA system, where the GADA system values in 14th and 16th century has put 10 values that really almost resonate with the prevailing sustainable development goals. If I see that the social sustainability of the GADA system, it means equality, inclusion, humanity, and economic sustainability, cooperation, shared prosperity, environmental sustainability, strong stewardship of nature, and you cannot cut tree without replacing, without planting the new one, and institutional sustainability, democracy, accountability, peaceful power, transition. There are important, valid, indigenous GADA system values that resonated to the current sustainable development goals. On the other hand, the Cooperative Bank of Oromia, the founding father, has put a value to, the bank, of course, established on cooperative principles. That is where solidarity, inclusion, and shared prosperity is there. And our legendary founder, his philosophy was the best way to fight poverty is through cooperation. And then through cooperation, we can support the community to thrive in the economy. We can mobilize our own local capital, and we can transform the lives of many millions in the country, millions of farmers. So when the bank designed strategy, we put all this integrated into our strategy. We named our strategy ODA strategy, where we mapped almost 60% of the sustainable development goals of the globe to our segment-led strategy. Shifts segment-led strategy. We have 7 segments. Within the 7 segments, we have mapped the important sustainable development goals of the globe, and of course some of them can if I can name those with let's say with agriculture, agriculture and the cooperative, no poverty, zero hungry, and the climate action. It's very, very important. With the retail, no poverty, reduced inequality, because millions of people are excluded from the finance. With MSME, decent work and economic growth and reduced inequalities. So these are the examples we have mapped from the Sustainable Development Goals to align with our daily banking business within our context. So in Africa, as African, we do have indigenous knowledge and indigenous values where we can really compare those values, what is happening in the globe, and align with the global environment. And then we will simply tell to our people to understand the context for execution. That is how we are thinking and doing our business in the country.
Thank you very much, dear Mr. Asfau. Thank you for sharing the values of the GADA system, which is really also a way to show how those SDG Sustainable Development Goals were really are very well connected with the cultures, the African cultures. Let's go practical. That was the call of this morning at the opening. Let's go practical with some examples. How some SDGs are translated into the operations and products of the bank.
Yeah, thank you very much. The segment-driven impact at scale. For that, our segment-led shift at scale strategy focuses on 7 key segments, each mapped to specific sustainable development goals of the globe. As I mentioned some of them earlier, we have almost covered over 60% of the sustainable development goals that map to our segments. Not only that, as a bank, sustainability, we have a sustainability initiatives. Within the sustainability initiatives, we have embedded such initiatives like replacing diesel generators with solar power, and our approach is the phygital, both physical and the digital. We have designed a unique branches fully powered by the solar energy, where there is no electric energy in the rural, made from shipping containers. And we have also adopted a green energy, fully powered green energy to our over 800 ATMs. There is no diesel usage for our ATMs, either the direct electric energy generated from the water or electric energy generated from solar power. And also we are working on the women's equality within our institute. So we are practically implementing those goals, and not only that, through innovation, through technology, scaling those technologies and the products down the ladder to the community, we are playing our part. That's how we are practically acting in our context.
Great, thank you very much. Today, let's go again more practical. Today we are facing a blatant reality, which is that we are late on the SDGs. Not only in Africa, although 2/3 of the SDGs are going in the right direction, only less than 20% are on track to be achieved by 2030. However, like the Coop Bank, many businesses, almost all businesses, have been very innovative and creative at various levels in their engagements for the SDGs. So we need to look at the SDGs a bit differently joining forces, building more partnerships, and this is really the core of our discussions today, for impactful and scalable initiatives and actually scaling them up. Can you share an example of a project that the bank has initiated and or participated in that really generate or have the high probability of generating high impact at scale on the SDGs and the capacity to further scale up in Ethiopia and beyond?
Thank you very much. As a leader of a financial sector, the financial inclusion is one of the critical challenge elsewhere in the world, especially in Africa. When we see the reality of Ethiopia, the borrowers, especially before the recent reform, the direct borrowers from the bank are less than 300,000 in a country where we are over 130 million. And to curb this challenge, we tried to do a lot of researches. So what we found the bricks and the mortar approach doesn't work to really bring the financial inclusion to the needy community down the ladder. From that, we have opened our digital factory 4 years ago and tried to innovate and partnering with local and global companies, including fintech companies. And then we have come up with several digital lendings. If I can tell you one case, maybe Michu digital lending platform. We named it Michu. Michu in Afan Oromo is a very close friend. In Afan Amara, it is very convenient. So it has dual meaning. The problem we tried to solve on this innovation approach is, if we see the data, 70% of MSME lack access to credit with an estimated 2.6 trillion birr financing gap. On the other hand, traditional banking requires collateral, so MSMEs cannot bring collateral to the banking sector. Financial exclusion limits growth and the jobs of MSMEs. So these are the problems. With our solution, we have provided an collateralized lending platform. Use alternative data for credit scoring. Data is a new collateral. If you have the right data, data is a new collateral. Provide instant access to finance for the needy community down the ladder. Target MSMEs and underserved customers. So during this, we have also faced challenges. Risk perception is there, limited credit history is there, digital adoption barriers, shortage of liquidity and the credit de-risking, limited collaboration, especially when we see our continent. Our continent is very fragile and fragmented. There is no collaboration. So we address through data-driven models and phased scaling and strong governance. If I tell you the key success factor in this area, the platform has dispersed over 52.5 billion birr, which is almost close to 400 million USD, to nearly 3 million loan accounts, achieving 80% use out of these borrowers and 80% women financial inclusions, creating approximately 2.7 million jobs, 1.3 million jobs sustained, and 500,000 self-employed, and 925,000 wage employment. And it is possible to really enhance the growth and create an opportunities by innovation. So this affects the sustainable development goal of the globe, the number 8, and then number 10 as well. So the solution contributes directly to sustainable development goals. The scalability issue, it's very easy to scalable such kinds of solutions because digital is low marginal cost, and the data-driven self-improving can be possible in elsewhere in Africa, and the platform-based, the platform can be integrated elsewhere. Even we can work regionally, not only country level. So as a strategic insight, this is not just lending, it is a financial inclusion infrastructure for Ethiopia and Africa. So the impact we have brought because of the power of technology is really unbelievable for me. You know, reaching millions of borrowers within few years is unthinkable in Ethiopia. So if we innovate, as you know, written in many literature, innovation means if we can make something complex very simple, if something unaffordable, affordable, if something inaccessible, accessible, that is the result of innovation. This is what we are doing at the Coop Bank of Oromia as a solution for the country, maybe goes beyond the country to the continent level as well.
Wow, that is really amazing. As we see the numbers, $400 million distributed to over 3 million customers and a lot of jobs, 2.7 created with this product, Michu. Data-driven models. That is really innovative, something data as collateral, which goes beyond the traditional approach of collaterals, and digital, using massively digital and leveraging the low marginal cost of digital. So that is really impressive. Thank you for sharing that. A follow-up question on that. Do they pay back?
Yeah. By the way, we are a bank. We are not a charity organization. We have to make sure that what we are doing is profitable. And we are managing the public money. We have to make sure that the money is repaid back. You know, the perception in our mind and the reality is different. What I have learned from this journey, the poor people are really trustworthy and they are committed. Of course, there is a default to some extent because of two reasons. You know, when we started the first commerce, you know, wrong people appears first, and then we have seen a lot of defaults. After we have really strengthened our data and the scoring mechanisms, we can try to refine the right people, and then they are paying. Of course, there is a default for misunderstanding of the product. When we launched the first product for 6 months, we actually launched a wrong product. When we did a survey, the repayment date was 22 days. Then we adjusted our product to weekly, bi-weekly, and monthly. Now, very recent, when we increased the limit to 300,000 for single borrower, we have raised the period to 3 months. The recovery is over 95%.
Wow.
And with the most, even comparing with conventional banking, more than 5x, and the cheapest digital loan in Africa as well.
That is really amazing. Now, looking at the partners of the example that you have just shared, the Michu, we can see you are already talking about blended finance because it is a mix of traditional lending but also grants or concessional. Can you explain and what is the role of the bank or the integration of the blended finance in the products or in the approaches and models of the bank at this stage?
Yeah, the role of the bank should be, catalyzing capital through platforms. So blended finance is a very critical, but it must be practical and scalable. If not, it doesn't work. So at Coop Bank, we scale impact through partnership arrangement. We have engaged partnership arrangement with many global players, including World Bank, FMO, IFC, USAID, UNICEF, MasterCard Foundation, Care Ethiopia, a lot of partners. From the technology point of view, we usually mainly work with the partners. Our technology provider is for digital lending is Kifia Technology. It's a local company. For payment platform is also Ibr, which is a local company. These platforms are really the success we have achieved is very big. So partner with developmental financial institutions, mobilizing domestic capital, and building platform can absorb external funding efficiently. By doing this, maybe blended finance workers based can reduce, maybe it de-risks early stage of loans for specific sectors. It leverages local banks. It supports scalable platforms. For this, we have started partnership with different companies. Especially recently, we have signed a partnership with UNDP Ethiopia to strengthen climate risk management in Ethiopia's agricultural sector by designing embedded climate insurance into the bank's lending operation as well. So we have started to really have embedded finance where we can accelerate our approach. As a bank, our ambition is to become a gateway institution for blended finance deployment in Ethiopia. So that's why we are engaging into partnership with different key players in the country as well as in the continent and in the globe as well.
Yeah, thank you very much. As we head to the end of this conversation, and I will let you, maybe with the authorization, the permission of the moderator, ask a couple of questions to our guest. Maybe a last one about the recommendation. We are heading to the Africa Regional Forum on Sustainable Development starting tomorrow. And we are keen to have the private sector perspective and views and recommendation captured in the discussions from tomorrow. What would be your, you have already mentioned the data-driven approach and data as collateral. Do you have other recommendations that we can take away?
Thank you very much. I think in the earlier speech, the Madam Director has concluded that in a best way. My first recommendation is just that resonate with that, move from ideas to execution. Solutions are elsewhere available, but execution is needed commitment, engagement, and the practical implementation of solution. So my first comment is move from ideas to execution. Then we have to have purpose-driven innovation. We need to know our purpose. Based on our purpose, we need to design innovation that bring impacts on the communities or on the environment, whatever we said under the Sustainable Development Goals. The other thing is, as Africans, Africa Scale Platform should be considered. Move from country-level solutions to scalable African models, including regional digital financial platforms, cross-border MSME ecosystem, and a proven solution that can be scalable to African level to regional levels. And the other maybe data as, if we understand really data is more than traditional collateral. So building the data is my recommendation. Strengthen local institutions, like empowering banks, SACCOs, the microfinancial institutions, and the fintech companies are the critical area. And then invest in digital infrastructure. Without digital infrastructure, we cannot talk about data-based collateral or data-based decisions. So infrastructure in terms of payment, data system, digital identity, and supply chain are the major pointers we need to take forward for improving our progress to implement the Sustainable Development Goals in our continent.
Great, thank you very much. You have named them. Thank you. You have named them all, the keywords of this conference, of this forum: infrastructure, digital platform, scalability. That's really what we will discuss throughout this day. Moderator, do we have time for one question? One or a couple of questions? Yes, please.
Thank you very much. And my name is Jimson Olufuye from Abuja, Nigeria. Well, thank you so much for the panel, for the fire chat. Excellent. My question is this. In view of the success you have recorded, what's been the role of the regulator? Is there any role for the regulator, maybe to fast forward the successful realization of the SDG? Thank you.
And the second one, thank you very much. The second one, yes, sir. Click there. Good. No, it's not yet on. Yes, good.
Perfect. So like I said, I'm the CEO of Africa Holding Limited. We are developers. So my question really to the banker, it's blended financing. I mean, when you have compared blending finances versus the traditional way of actually structuring the capital stack, I mean, what level of inclusivity have you actually noticed? I mean, how many people were able to actually borrow from you? Thank you.
Good. Thank you very much. A lady to be a bit balanced. Yeah.
Always great hearing you speak, Ato Darbe. My question is, for us who live here, it's obvious the success that Coop Bank has had with financing
Please, can
MSMEs.
you raise your...
Oh, sorry. Is
Yes,
this eligible?
please.
Okay. It's very clear the success that Coop Bank has had with funding MSMEs. So my question and maybe challenge is what are the plans to now 10x that? As you mentioned very clearly, just a small portion of the country has access to financing. And so looking maybe to the next 3 to 5 years, what plans does the bank have to 10x that amount and to grow the funding space and blended financing space?
Great. Thank you so much for the questions. Mr. Asfau. The role of regulators.
Thank you very much. Regulators have their own hairs and tails, and it's not easy to deal with regulators, especially countries like Ethiopia. The platform I have told you earlier, for approval, it took me 2 years from the central bank. It took me 2 years to secure approval. So it's very challenging, Of course, they are absolutely right. They are regulating the economy. They cannot decide anything what they don't know. They have to be careful enough. I acknowledge that. But the bureaucracy was there. You know, the reform happened in Ethiopia very recently. Because of this reform, I cannot tell you the relief we have secured as a financial sector or as a private sector in the country. Now, even the governor told his team, anything comes from Coop Bank should not take more than a week. Now we are securing any platform, any solutions we have taken to the regulators is approved within a week time as a sandbox experiment. So that now they are really collaborating with us. It's up to us to move forward as much as we can. In the past, you know, what we did, something happened in Kenya, why not in Ethiopia? Something happened in Rwanda or Tanzania, why not happen in Ethiopia? Why you guys just close the door and block us? I was one of the executive team challenging the regulators as well. And thanks to God, now here we are.
So sometimes the private sector can really champion and drive that change at the national level. Yeah.
Yeah, exactly. Yeah, now we are almost a member of technical advisor of the NAFIR, you know. NAFIR means National Agricultural Financing Implementation Roadmap, because I didn't tell you, we have 128 agronomists within the bank. We have a profession down the ladder. We are not only the bank, we are also agricultural experts. And so we are the only bank that's the member, the technical member of the NAFIR with the National Bank of Ethiopia and the Ministry of Agriculture. And so we are a part of a lot of things. From the technology point of view, we are also the technical member of the sandbox of the National Bank of Ethiopia. We are collaboratively working to bring impacts, to bring financial inclusions down the ladder. Coming to the inclusivity, the Michu platform, the digital platform is the first flagship product for Ethiopia. I have been in a banking sector over 25 years. Since I have graduated from university, I have been in banking sector. My whole career is in a banking sector. I used to work for Commercial Bank of Ethiopia at different levels, from junior officer to vice president banking operation, before coming to Coop Bank. I have never seen the product that covers the whole country, from north tip of Tigray to the southern tip of the country, from west tip of the country to the eastern part. We have a lot of borrowers in Gambela, Benishangul, Tigray, Amhara, Afar, Somalia. Reaching 3 million people is not impossible through bricks and mortar approach. Through bricks and mortar, I have only, I don't know, maybe my team are over there, they can tell me, I don't have 40,000 borrowers through conventional banking. The portfolio is big, but there are very few. That's why the country has only 500,000 borrowers in a country where we are 113 million. So the solutions, the digital part, is really the most powerful to bring inclusivity in every aspect. I can say this. Coming to our plan for 3 to 5 years, hopefully not only this side, within the coming 3 years, our plan to reach farmers only, 3 million smallholding farmers. 3 million smallholding farmers. This is the farmers side. From the MSME side, it's close to 6 million MSME within the coming 3 to 5 years. This is not 5, but within 3 years. So the power of technology is really exponential. You can, as long as you have designed your service, if you have the right product, if you designed your model, if you structure yourselves and engage into partnership, millions, counting millions in Africa is very, very simple. In a country like Ethiopia, millions of people, counting head of millions is very easy. So it's our approach that really bring impact to reach out to the millions of community down the ladder. That's our ambition, that's our dream. And of course, not ambition, we love execution. We need to count numbers. You know, last year alone, for digital lending, the same platform we have designed for agriculture, within the pilot alone, we have reached out to 45,000 smallholding farmers. We dispersed 3.2 billion birr. We have also designed another platform for Sharia compliant. As you know, as you may know, in Ethiopia, close to 40% of the communities are Muslim. We have also designed a Sharia compliant platform to bring inclusivity and to enhance equality of the sustainable development goals. This is how we are doing.
Great, thank you very much. Thank you, Mr. Deribe Asfau, for making the time today and for being a really appreciated, much appreciated guest and speaker today. I hand over to the moderator, thanking you also for your patience.
Thank you very much for this insightful discussion. Let's give them one more round of applause, please. Okay, we'll now take a short break for a group photo, so anyone who wants to join. And then after that, we'll have a 15-minute health break. Since we're short on time, please, let's come back in 15 minutes. For now, we'll take the photo session, please. Yeah. Anyone who's interested to join? They're waiting for you. So maybe. They'll be on the front of the stage. Yes. Or outside. Okay. Okay. We're all taking a group photo outside. Please proceed. The ushers will take you to the health break area. Thank you very much.
If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creative.
Welcome back, everyone. We'll be starting in a few moments, so if everybody could take their seats. I hope the health break was good and you were able to network amongst each other. We'll proceed in a few minutes. Welcome back, everybody. We're about to start the session, so I'll ask everyone respectfully to take their seats. Okay. We'll be starting, so please proceed to take your seats, please. Thank you very much. So, before we move into the roundtables, we begin with a reality check, and importantly, one grounded in the perspective of young entrepreneurs and innovators. Because when we talk about scaling solutions across Africa, we also need to ask, what does this look like in practice for those building businesses today? So for that reason, this panel brings together entrepreneurs who are not just part of the conversation, they're actively building, testing, and scaling solutions while navigating the very challenges we've been discussing so far. So it is my pleasure to invite our moderator for this session to talk about what these perspectives the young people have. So Mrs. Nozipo Helope, I hope I pronounced it right. I'll invite you to the stage. She is a regional trade analyst at UNDP. So she brings strong expertise in regional trade, private sector, development, and policy, and will guide us through this important conversation. Nozipo, the floor is yours.
Thank you very much. Hello? Are you able to hear me? Okay. Good morning once again, ladies and gentlemen, and thank you for this opportunity to engage on what I think is such an important topic. I'd like to welcome the panelists to the floor to come and join me as we further delve into the conversation today. I will call on Mr. Solomon Odongo, CEO of Dia Center Group, Mr. Marcos Lema, CEO and founder of Ice Adders. I kindly ask that you encourage them by giving them a round of applause as I call their names. Thank you very much. I'll call Ms. Bethlehem Abebe, founder and creative director of Sweet Design, Ethiopia. Mr. Abel Haile Georgis from Bamboo Labs. Kalkadine Mugileta, co-founder of Clear Skies Technology. And I will call Betty Ajay, Director Operations Program of Green Africa Youth Organization. Thank you very much. So without further ado, I think we've been taking through a sense of the importance that private sector plays in the development, but we'd like to welcome you to this session, which is essentially a reality check for businesses and entrepreneurs and youth perspectives, right? We often speak of financing gaps. We know there's trillions of dollars, capital shortages, investment needs on the ground, but I think the issue is not just the availability of capital, it's whether it is accessible to the people who need it, whether they are in ecosystems that can actually absorb it, and ultimately, can they scale with it? So across market, entrepreneurs are navigating a lot of constraints. And I think who better than the people on the ground to actually share their experiences with us? I also believe we have the correct people in the room, not only to guide the conversation, but also explore if financing mechanisms can be architected better to actually cater for the people who are actually to access them and use it as their needs warrant. So without further ado, I'm going to give my panelists all a minute, please, in the interest of time, to just introduce themselves, tell us a bit what their company is about. And like I said, unfortunately, we don't have a lot of time. So when I do raise my hands, that means you have 2 minutes left. So I will start from that side with you, Kalkadan, and may you please introduce yourself. Thank you.
Thank you so much. My name is Kalkidan Mulugeta. I am the co-founder and CEO of Clear Skies Technology. We are 9 years old. I've been an entrepreneur for 9 years. When we started off, we wanted to make a dent in the telecom and technology value-added services space. Like most entrepreneurs know, you start with a big idea, but at some point you have to pivot. So right now, Clear Skies provides technology solutions for enterprise clients. Our product that I'm going to talk about today is an end-to-end e-procurement platform that we've provided, and it's doing incredible things, and I'm excited to speak on that today. Thank you.
Okay, hello everyone. My name is Abel Haile Georgis. I'm a founder and CEO of Bamboo Labs. That's a company we are producing eco-friendly, affordable mobility options. At Bamboo Labs, we are making bamboo-made bikes, bamboo-made wheelchairs, crutches, and related stuffs. Thank you.
Hi everyone. My name is Betalehem Abebe. I am the founder and creative director at Zoe Design, a slow fashion brand based in Addis Ababa, Ethiopia, that started on the basis of creating an inclusive fashion brand. Thank you.
I am the CEO and co-founder of iSadis. We have been in the market the last 15 years in Ethiopia primarily. When we started, like, the internet penetration was like less than 1%, 2010. Like a country where there's no a lot of technological innovation was happening. But now, looking back after 15 years, like, there is a significant progress. And our mission is to build a technology-based entrepreneurship ecosystem here. Currently, we're also expanding in different cities within Ethiopia and in Jimma Wasa, but also outside of Ethiopia. Currently, we're also operating in Egypt and also opening other markets. Thank you very much.
Hello, everyone. Solomon Odong Maxwell is my name. From Uganda, the CEO at the Center Group. We develop industrial ecosystems and strategic management of industrial assets. We work with the government. Currently, we are developing green industrial and special economic zones, the biggest around the region, 5,000 acres of land. And also, we are developing a 1 gigawatt power plant in Uganda. We have a factory now that is sanitary pads manufacturing that has capacity to do 1 million pads per day out of banana fiber. So that's what we do. Thank you.
Hello, everyone. Nice to be here. My name is Betty AJ. I'm the Operations and Programs Director for the Green Africa Youth Organization. We are a youth-led, gender-balance-focused organization that supports environmental sustainability and community development. We were founded in 2010 and currently operate in Ghana, Uganda, and Botswana with project locations in 12 countries globally. Thank you.
May you please give my panelists a warm round of applause. I think they deserve a better one because they're doing such amazing work. So I'm going to ask us to do something. Can we clap once? Clap twice? 3 times? 5 times? That sounds better. Thank you very much. So I think this discussion is intentionally grounded, and I say that because we have people who are working in diverse industries, right? But I believe then the challenges would be similar. So as we go into it, we are not here to actually talk about what should work, because I think we know this. However, we are here to understand what is actually working, what is not, and why, and who better to tell us. So I'm not going to go in any particular order. I will, however, allow us to frame the conversation as it flows into one person to the other. So we'll move 2 steps. What is actually needed, what is happening, and what are the practical solutions? Because I believe the solutions sit here with us, the people who actually do the work on the ground. I do believe also that there are people in the room who can help us co-create these solutions that will be feasible and translate into things that are actionable on the ground, right? I will start with Mr. Solomon. From your experience in scaling a business, what do you think is the biggest constraint that makes it difficult to access and effectively deploy capital? And I ask you this because you spoke of the great initiatives and the work that you guys are doing in industrialization, right? And solutions also that are sustainable. You spoke about being able to produce 1 million pads a day using banana fiber. which means also the innovative ways in which you guys are thinking about. So what then do you think with all these great ideas, because I don't think it's the lack of ideas we have, what do you then think is the challenge to accessing and effectively deploying the capital?
Thank you so much for that question. And I think many people, especially the young entrepreneurs, face accessing capital. I don't count it on one of my biggest problems, because having worked with some of the biggest investors on the continent, before I started into developing these large-scale projects, I was consulting to bring in large-scale investments in the country, in Uganda, and we have done, I think, over $400 million in e-mobility and telecom. So, and I understood how these sort of large-scale investments are structured. And part of the thing, I think, which many people face is fragmentation. Fragmentation of ecosystems is one of the biggest barriers to access of finance. And I want to use a practical example, like for our side, is that you find that you're setting up an industrial zone like ours, with you as a private sector. But at the same time, the government agency is setting up something that can work on the similar ecosystem, but in another different location that doesn't have anything that is interconnected. And what I've known about finance needs where it's predictable. That if I put A, B is clear. For example, for us, we invested in first on the land. We got the tenants. For those who are in industrialization, industrial park development, our business is on the tenants. And once we have that, we can now discuss with the African Development Bank, whom we had some of Badea, some of our potential financiers. They can already see a clear business model and how we are going to make money. So you have a business idea, but you don't even know how to make money. Then the other part is, I invest some small money also here in different startups, but you find many of our companies, especially in Africa, they don't have records, no financial records. There's no exact governance structure of that company. So money cannot flow in that kind of structure. So for us, we use SPVs on most of our investments and projects we're doing, that we can now be able to leverage different players to come on board in order to invest in a project.
Thank you very much. I do have a follow-up question. And I think you've put me in check, because usually when we work with private sector on the ground, we say that often development partners assume that financing is a challenge. And you blatantly say that's not what the challenge was for you. You speak to development, business development problems. You speak to fragmentations. You speak to people not understanding the structures within their own businesses that they operate in. So what then do you believe will be practical, tangible ways in order for us to actually assist these entrepreneurs and these young people, be it in startups, in your traditional businesses? How do we then help them move to a place where not only about bankability, but being operational before we get to a point of bankability?
Thank you. Now, still, I want to use experiences from what we use for what we do. For example, if we're going to set up sanitary pads factory out of banana fiber, we need to understand who are all the key players in that ecosystem and bring them on board. And we do not need to repeat the same thing. For example, we are partnering with an organization called Sasakawa. They have 50,000 farmers. So we do not need to repeat that same, going through the same bring on board. So we leverage what they have. We also come on board with what we have. And then we do all this together. So that, the first key thing is mapping out the entire ecosystem. Who are the key players? Can you bring all these on board and sit down? Then maybe the other thing also, I think we fear a lot, especially what I've seen in Africa, partnerships. Everyone wants to compete. And for us, like myself, we decided to only do large-scale investment because of the problems we're having in Africa, that they need bold solutions at scale in order to get us where we are at. And for you to do such big-scale investments, you have to partner with different people in the entire ecosystem. And with that, it's easy now to go with one-to-one financer, like when the bank and say, we are coming together, but customize different financial instruments for us. That you borrow differently, but with that, even the financier looks at the risk is less because he can see the entire clear picture connected. And that's what actually we're doing. And we realize that on that entire ecosystem, for us, we own 10%, the other people own 20%, and everyone is big at the end of the day.
Thank you very much, Mr. Solomon. I'd like to move on to Madal Bettelhem Abebe. From the creative sector, we heard Solomon speaking about how you are structured, partnership, leveraging on existing ecosystems. I do, however, believe that some industries or sectors that are not necessarily deemed the traditional way of doing business would find it a bit harder to find access to these, be it financing mechanisms or the capital that we're so told sits somewhere, but not able to know what are the practical ways to do in order for us to be able to access it. So being from the creative sector, what makes businesses like yours fall out of being considered as bankable? And how do you then think, having run such a successful business, other businesses who probably in the same industry or in the sector could borrow from you to strengthen their business mechanisms?
Thank you, Noziko. I would say as a fashion entrepreneur, I fully operate in a creative sector, a very deeply creative sector. And when we talk about bankability in the traditional sense, let's say like in Ethiopia, unless you have collateral, it's not the easiest thing to get loans. And for me and my business, I've been operating through personal finance and micro grants from different organizations. And like he discussed earlier with COOP, I was actually one of the first to try the collateral-free bank loaning systems they have, which has been wonderful for small businesses. But now when we're talking about scaling up, there's only so much 300,000 birr can do for a small business to go into the next step. And at the same time, I understand banks need banks are businesses. They need to make profits, understandably so. And at the same time, the way we generate revenue doesn't align with other businesses, I would say, because for us, it's a seasonal business. So we have to first invest in material, production, labor, and then the returns come later on. And once you borrow money from the banks, you have to pay them back every month. And sometimes that doesn't happen. So I would say it's been not the easiest, but yeah, it's going.
Thank you, Betty. I think you've also highlighted or indicated for us that these products may be there. However, in the way that they were designed, there wasn't a long thought about it and how that would translate when a business goes from one phase into another. Like you say, you were able to access this funding when your business was at a certain stage. Yes. And now that you're ready to scale, it does not necessarily support what you're trying to do at the scale of what you're trying to do. With that being said, I'm going to move on. Thank you very much, Betty, for that intervention. To Mr. Marcos Lema. So you're going to tell us a bit more about startups and understanding as a pioneer in Ethiopia's innovation ecosystem. Why do so many startups fail to become investment ready? And please do correct me if my statement is incorrect by saying they fail to be statement ready, because I do know that most startups have brilliant ideas, but get to a place where their life cycle is only 3 years. And maybe you could tell us, is the issue really investment readiness, or is there other things that we are overlooking as people who are not necessarily operating on the ground as you would? Over to you.
Thank you very much. So I think, I mean, first of all, is like, what does actually mean investment ready for a company? So like most startups started by have a noble idea that can solve local problems usually, and having that ambition hopefully beyond their initial market. Oftentimes these ideas when it comes to execution, requires a quite like major structuring. One is like really defining the right marketplace, the right customer segmentation, and understanding also the kind of the business context they're operating. And when we talk about like investment readiness, there is a specific kind of businesses that investors are interested to invest on, which is highly scalable companies that can actually like go beyond their initial market and they can grow. So I think in a sorry, in a general sense, not everyone needs to be investment ready per se to really like deploy capital. But what we've seen so far within Ethiopia, for example, some of the challenges for companies to grow are kind of general challenges that you can find in most emerging markets, and then there are also very Ethiopian-specific kind of challenges. I want to build on what Solomon also said earlier, especially when it comes to defragmentation. You know, there is no kind of collaborative mindset. I think that's a big challenge, and the capital issue is also a big challenge. To give you, for example, in Africa, the last quarter in this year, the first quarter of 2026, like the major countries like Kenya, Egypt, Nigeria, and South Africa, they raise like substantial amount of money from private equity. So Egypt, for example, $154 million, Kenya $98 million, and South Africa $134, and Nigeria $94. And other African countries, actually, like they're not really performing as such. Like, for example, a country like Ethiopia in Q1 2026, there is only $5 million deployed. I think there is a lot of challenges around that. First, of course, investors are only looking for a market where other domestic investors are investing on. So why would a foreign investor invest in Ethiopia when there is no enough Ethiopian investors are actually deploying money, right? So I think it's like there is a lot of like issues when it comes to policy and other issues that's making the startups not to get into the level that we need to make them investment ready, but also eventually raising money.
Thank you. I think your intervention also takes me back to what Solomon says, investments or investors rather liking predictability. I think they also want to know at the end of the day what the rate of return in this investment will be. But then how do we help these businesses that you say they start with an initial ideal, great idea, but also don't know how to break it down into something that you can actually package and make it sellable to someone to actually invest in your business. But maybe you can tell us, because you've done it. I can come back to you so you think about it, and then you can practically tell us how do we go from the ideation stage and where or whose door do we knock on, you know, because as we speak about the realities on the ground, I think it's also important to consider and offer solutions as to how people can navigate these spaces that you already exist in. Thank you. I'm then going to go to Betty Ajay. Betty, as you work in a community level and you'd understand obviously the nuances that sit there, where are current financing and delivery models simply not reaching people, you know? I know we have Agenda 63 that always says we're leaving no one behind, but maybe you could shed light, really, are we leaving no one behind or actually increasing the gap and not reaching the people that we need to reach? Over to you.
Okay, thank you very much. Allow me to respond to this question from a more personal angle. When I started pushing one of our Green Africa Youth Organization, Zero Waste idea, I remember clearly that I was in school doing my university time, and just in the compound, I saw a woman cooking, and she had dried palm kernel shells just beside her, and she threw it into the fire. Then I asked her why she did that, and she said it makes the food cook faster. So I went back to school and I went to speak to my supervisor, and I asked him, I want to do this research as part of my thesis. And he said, you don't have the funds and we don't have the laboratory to carry out this research. I reached out to my father and said, Dad, I want to do this project. And he said, why can't you just do a more simpler project? I don't have the money for this, sorry. I waited 2 weeks after I called him, and I told him that I needed to buy like 5 textbooks to complete my bachelor's degree. He sent me the funds, but instead of me to use to buy the books, I used it for my project work. That project work won the best award in school and was featured in Elsevier. And currently, the project from palm kernel shells to charcoal brickwork is currently being done in Ghana and scaled to Uganda. And we are currently diverting around 170 tons of waste monthly from the landfill. And this is the reality of many people across the globe. Access to finance still remains one of the biggest issues. And if you talk about women, talk about youth, we are doing the work with little money. We are recovering the waste, we are setting up small enterprises. But at the end of the day, it's still difficult. The systems do not support. Funding arrive for polished structures, which we don't have. Long track record, audited systems, accounts, and capacity building or capacities that usually comes after someone has already supported a particular organization. So you hardly see catalytic funds. So a lot of people closest to the problem are often the farthest from the money, and you all agree with me. And that's why Gaio has currently created the Africa Youth Climate Fund that is mobilizing 5 million yearly to support youth-led research, innovation, and movement building. But what needs to change should be very practical. We need funding that meet people where they are, small flexible grants, early trust, capacity support, alongside finance, simpler systems, and more rooms for local actors, especially women and young people. Because at the end of the day, if we are only funding what already looks successful on paper, we will keep missing the real innovation and interventions already happening in the communities. I would just say let's define our inclusion by bringing young people and women into decision making, not just treating them as beneficiaries, but if we want real impact, we must finance proximity, trust, and local leadership. Thank you.
Thank you, Betty. And I think that was very insightful. And I say this because working particularly on the African continental free trade area issues, what you find the biggest challenge would be people asking about moving from informal to formality or businesses formalizing. And I think what you just now took us through is highlighting to us that our systems already work as they are. However, the challenge we're facing is that in order to access these funds, we are then asked to change how things have been working for us to meet the needs of the funder instead of it being the other way around. And with that being said, I really want you to help us find this big disconnect between grassroots interventions, the work that has been done by local women, as you say, and the youth, and investor expectations. And I know you've probably thought about how do we then get to a point where they understand that they must meet us where we are and not the other way around.
Yeah, exactly. I think it's very important that they meet us. I would also want to share another personal story. I remembered when I started the project, I walked up to the municipal coordinating director and I told him that we want a land from the government to set up a material recovery facility that will be diverting waste from the landfill. And he was like, you are a female, you are 22 years old, what can you do? I think majority of the time we are being defined by what is seen. The finances just keeps on assessing what is available, what is practical, what is on the paper. But at the end of the day, that same project, we were able to continue the project. We kept on building the project. And 2024, it won the Headshot Prize. $1 million as a youth-led organization. And that was one of our greatest breakthrough. So to tell you that when young people say, or when I say like other external audience say young people's ideas are not bankable, I think the real issue is that too many systems just still struggle to recognize value early, right? Investors often look for scale, they look for formality and predictable returns. But on the ground, real value may look different at first. It may look like informal workers being recognized. It may look like informal workers having dignified waste systems and formalities. It may look like behavioral change, local ownership and partnership that are still growing. And it's just very important to say that on the paper, the work might look very impressive, but on the ground, it can look very, very different. And it's the foundation that we really need to prioritize. And that's why Gaia will have another solution that we are piloting in communities called the Repower, which is deploying plug-and-play renewable microgrids in off-grid communities across Senegal, Niger, Madagascar, and Ghana that combines clean energy technology with youth training, local ownership, and community-centered stewardship. I think at the end of the day, my call is very simple. We need partners who are willing to back youth-led interventions earlier with trust, with resources, and the support needed to grow real solutions. Thank you.
Thank you, Betty. I'd like to just remind the audience that if you're not able to hear us well, you can use your earpiece and the sound will probably project better. Thank you for that lovely intervention and your call to action. I'm going to move over to Mr. Abel. You know, you work at the intersection of technology and innovation. And what are the main barriers preventing tech-driven solutions from scaling in Africa, from both a financing and ecosystem perspective? I do also want to ask, really in financing and how you've perceived it while trying to scale your business, do you feel that you've also been incentivized for finding solutions that are sustainable instead of following the conventional way of doing or building what you are currently building? And maybe you can just shed a light on, you know, what you actually do with your bamboo work. Thank you very much.
Okay, thank you. So yeah, let me start with how I am into this business. It was like a few years back, actually. I met a young man who was crawling on the street of Addis, and he told me that getting wheelchairs or other assistive device like a country in Ethiopia is very hard. And after that, I do some research, and from WHO data, in Ethiopia only, we have about 1.4 million disabled people in need of mobility options. And then, at the same time, bamboo is one of the abundant resources that we have in the continent. Almost in Ethiopia, 70% of the African bamboo resources are found in Ethiopia. That's about 1.4 million hectares of land covered with bamboo. Not only the resource, actually, the mechanical and tensile, the chemical property of bamboo is one of the opportunity that we have. And then I decided to provide a solution for the problem and to do that in an eco-friendly, locally sourced and locally made manner. And then I was able to make the first bamboo-made wheelchair prototype, and that was not, I mean, to the standard where that's required. And I got an opportunity to be trained in the US and in Germany to build mass manufacturable bamboo products. And after that, I see an opportunity from, the Ethiopian government launched a 10 years mobility strategy that supports walking, cycling, and using public transport. So at the same time, making wheelchairs and bicycles is one of the area that we are working currently. So like any startups in Africa or in Ethiopia, we have faced a challenge to bring that idea to as a business. One of the challenge was finance. So during that time, we got an opportunity from UNDP, that's CRGF funding program that's called Credit Risk Guarantee Fund. Then when we approach the financial institutions, they require, the collaterals. I can say, like, if I want to get a loan of 1 million birr, I have to present a collateral that's equivalent to 100 or 150% of the loan that I am requesting. So that was one of the challenge because most startups fail during early stage because they are not able to provide collaterals to get such kinds of financial supports. The other challenge in terms of ecosystem is when we are operating as a business, I mean, we are not only making a profit, we are also making impact in the lives of people. So that way, balancing the impact and the profit was one of the challenges. In Ethiopia, we don't have a system that supports a social entrepreneurship type of business. So that was one of the challenge. Currently, the Ethiopian government launched and also adopted the Startup Act. That's great opportunity for young entrepreneurs and startups coming. But in our case, the finance and the ecosystem, I mean, in terms of social entrepreneurship area was a challenge.
Thank you very much, Abel. And thank you for shedding light on that. That sometimes also in our solutions and in our innovations, as we want to take into consideration the social impact, we also need to still consider how we are able to sustain it. Would it still be bankable, you know? And sometimes you just want to make a difference. But however, it comes back to sustaining and running a business. I will come to Ms. Kalkidan, and you, having existed in this tech space, startup, have probably also had some stumbling blocks, and particularly understanding if the areas in which you exist in are an enabling environment for your business to actually bloom and grow. I mean, we have frameworks, particularly like the AFCFTA on the continent. And we can also go back to the regional agreements that we have, or the regional frameworks, your ECOWAS and so forth, to understand that are you then able to leverage this, right, to better support tech entrepreneurs in expanding? Because sometimes you find your investors also not where you are situated. Someone, like Abel said, from Europe was able to finance them because they believed in the solution that they had. There might not be interest necessarily from local people. So how do these frameworks then help us position ourselves in a manner that we're able to access this funding?
Third time is the charm. Thank you for the question, Nosy. So from my experience running a company, and even what I encourage a lot of small businesses or MSMEs or startups is not to limit themselves, right? So you could have an idea, you could have a solution, which I did when I began. And you might be too early, you might not have the right product market fit, but that could be just for your geographic location. And so I'm really big on expand. Prior to starting a business, I worked for an organization, a startup as well, where we were present in 24 African countries. And that gave me so much exposure because I was in charge of about 6 countries on the continent. And in countries where you wouldn't imagine you'd get much business, we were doing about $2 million in sales. And in some other countries, we were doing much less. So that initial exposure within the continent really helped me understand that you never, ever limit yourself. So I'm obviously a big fan of the African Free Trade Continental Agreement. I wish that we had chapters in every single country. Another thing I think with AFTA is that to push for partnerships, which is what Marcos mentioned. If you are starting off, or if you are maybe struggling with getting access to capital, I think looking at, okay, who can I work with? If you are, for example, right now I'm in the e-procurement sector. I have partners in Nairobi who I work with, right? So that means that it's less capital intensive on our business. We can partner, we can share, we can experience share, because running a business, you tend to go through the same, challenges for the most part. So I'm big on partnerships. And I think even COMESA, I don't think we're even taking advantage of some of the benefits of COMESA. I have some friends and colleagues who produce clothes and things in Ethiopia and want to expand. But COMESA offers tax-free incentives for a lot of these businesses. So I think even for us as entrepreneurs is really, just getting that exposure, asking the questions. Of course, are there hurdles? Are there challenges? Absolutely. There's no question about that. But there are a few things I think that are working with FCAT, with the Africa Free Trade Continental Agreement. I think that we look forward to that really spreading and working. I think for me, the biggest gain from that would be the taxation issue. Lack of double taxation, I think, is such a big challenge. Even when you're getting taxed in one country, any entrepreneur can tell you how much of a hurdle that is on a business. So yeah, I think that's what I have to share.
All right. Thank you so much for that insightful contribution, Kalkadan. I am actually saddened that we're running out of time. However, I don't want that to be our last parting in the conversation, to also allow maybe some time for people on the floor to intervene or maybe ask some questions. So we're going to do things differently instead of with our follow-ups. Marcos, I still do want an answer to that question, though, if you can help us, right? But I'd like to give everybody a minute. Be it like Ms. Betty Ajay did it, a call to action, solutions, but really just highlighting practicality also of this capital that is afforded to us, accessibility. We spoke to fragmentation, we spoke to ecosystem that has players that don't necessarily speak to each other. So how do we partner, how do we scale, how do we access, and maybe where does this capital sit? Maybe one of you knows. We'll start with Ms. Kalkadan, if that's okay with you.
Nosy, can you repeat the question?
So the question essentially is your reflections, right? And I'm saying this because I know we're running out of time, but I don't want us to leave here without knowing what practical challenges you face. We spoke about, or really in essence, we are trying to highlight the reality on the ground. And we've spoken to what needs to change in our first round of conversations, or rather we've highlighted the realities on the ground or where the break in the system is. So now my question is, what do you think needs to change? Is there something maybe you need to highlight to us that you see is something that needs to be made aware by people who are actually players on the ground in these ecosystems we speak of, but break it down practically to say what now and where now in this reality check?
Perfect. So I think my response with that would be twofold, because I think there's also an assignment for entrepreneurs as well as the ecosystem builders. For the entrepreneurs, running a business, essentially, you have to have a sellable idea, right? I think if your product or your service is not sellable, then it's hard to call it a business. So really thoroughly working on your product market fit and having metrics that you track over time. In Ethiopia, one of the most important things to have as an entrepreneur is a good accountant, because that could set you back, hundreds and hundreds of thousands of birr and time. But then, of course, for the ecosystem builders and players, from the government, one thing I realized in my journey, I was so passionate when I first started my business, Nosy. I felt like I saw a lot happening in the continent, in the technology, in the telco space that I wanted to bring home. And I used to go to, Ethio Telecom offices and say, hey, there's a way we can send money, on our phones. And they'd look at me and say, oh, this is not going to work in Ethiopia. But one thing I realized, to be successful in Ethiopia, it's very important to know what the government strategy is. You could have your best idea, and I'm all for disruptions, but it's also helpful when you know where is the government going, what are they investing in for the next 5-10 years, and align whatever you're doing with that in order to have a quicker product to market fit, to be able to get funding. But also on the government side, if you look at any of the successful countries we've had, it's because of SMEs, because there has been that platform for SMEs to thrive. The USA, that's how the USA grew, it's SMEs. So you have to have investment. And I think coming back to the taxation issue, the tax burden is really high on us. we as entrepreneurs we pay the same percentage as large organizations. And really that's not practical. If you want the country to succeed in the long term, if you want long-term taxpayers, that has to be looked at over and over again. And yeah, that's my parting shot. Thank you.
Thank you, thank you. That was very insightful. And I think also a lot of businesses would also relate to the issues that you speak of, particularly the teething issues as well, the taxation issues. But I think what you highlight also is understanding the priorities of the government, right? Because the landscape also, or the policies on the ground may not be set up in a way that they enable you to operationalize your business in the manner that you would. So thank you, and we'll keep that in mind. Mr. Abel, over to you, please.
Okay, I think that's the same with Al-Kidam, but just to add a few points. I was just reading some research about the success rate of startups or SMEs in Africa, and it's almost 70 to 90% of the startups fail during their early 5 years of the business growth. So in terms of scaling the business, for example, as a Bamboo Labs, we are also operating in other African countries like Kenya, and we are also planning to expand to other African countries. So when it comes to implementation, actually there is a big challenge. The system and the regulation on ground that we have in Ethiopia is not the same as in Kenya or other African countries. We have really good initiatives like AFRSD. That's something that can bridge problems like that. But when it comes to the practical implementation, as a call of today is let's go practical. My call for today is just to closely work with the private sectors and SMEs that they are facing the challenges on ground. Thank you.
Thank you very much, Abel. Over to you, Betty.
Thank you, Nozi. I think when Al-Kidan mentioned taxation, that's where it hit me. I would say trust and clear conversation between government officials and entrepreneurs when it comes to taxation and understanding why we are being taxed a certain amount, because for me, fashion is seen as luxury. And the issue is not just lack of finance mostly, it's also a mismatch between types of support available and actual support that the creative entrepreneurs need. So that being said, I would like to see more tailored financing models and more trust in the creative industries as viable economic sectors and stronger systems that support us, because the demand is there and the potential to grow from our side is also there.
Thank you very much, Betty. Over to you, Marcos.
Thank you. To fuel entrepreneurship and economical development, the whole ecosystem needs to work together. For that, I have 3 action, call for action, and one is culture. So I think we need to celebrate our entrepreneurs who are building solutions every day. They are not someone to fear. They are not the ones hiding money from public and so on. So I think that's the first step. And the other one is creating enabling environment. Let the talent to be tapped, universities to get the right instruments to bring in the right kind of talent that applies for entrepreneurship. And also supporting intermediaries like innovation hubs. There are great initiatives like UNIDO's initiative, for example, the Creative Hub that's supporting the entrepreneurship on the creative economy. And lastly, build the right infrastructure. Not just only telecom infrastructure, but also payment infrastructure and other infrastructure where the ecosystems can be enabled. So if we really build the whole ecosystem to work together, I think we can create a sustainable development. Thank you.
Lovely. Over to you, Solomon.
All right. Thank you. I think I have a few thoughts, but also some of the practical solutions that we're doing, especially in regards to raising financing. I think, to me, from practical experience, for people who are developing projects like ours, which are quite simple, for us, want to be able to manufacture everything on your table: salt, sugar, very straightforward, is that there should be a lot of time spent on project preparation. And I've realized many projects fail large scale, and I've seen many of these because people rush to execute than understanding what needs to be done. We have a 5-6 year plan we first developed to understand that this stage, for example, pre-planning, what kind of finance do I need at this stage? By the time I go into post-planning, construction, and then operation. So then I find many people try to raise financing that is meant for construction at the pre-planning stage. So project preparation is very key. And then and that project preparation talks about what kind of ecosystem are you going to play. And I want to add on something that we usually forget on developing ecosystems. A policy, I think my colleagues have talked about, we had to change certain policies in our government for us to launch one of the biggest now, together with the company, e-mobility company in Uganda now, with 20,000 bikes on the road. We had to spend 2 years, and also with the government, working together, showing them that if for this kind of investment to come, we need to tweak this policy and that. So all those things are pre-planned, but also there's aspect of talent. We also have an issue of fragmented talent. Talent is very key, and we are, as a company, we are taking that personally. Like as a company, we want to be able to train people who can be able to implement this. Now, there's something that is also very key that I would suggest us to adopt. We made inputs in our national development plan called the public partnership, public-private community partnership. That element of community, especially on large-scale projects like ours, the community is very key. And for us, on our zone, the community is a co-shareholder of that special economic zone, because we know for this project to succeed in that special community, the community has to own it and push for it. Lastly, last year we signed. We're trying out something to raise money through tokenization. I think most of us have heard about it. We signed a $5.5 billion agreement with a US-based company to try out to tokenize industrial assets. What is, maybe for simple terms, that if we have a power plant, like what we are developing in the first phase of $65 million, we're able to tokenize this to 65 million tokens. So this we bring on board small investors to invest in large-scale projects. So once, if this tryout, what we're trying to do works out, it's going to change the entire way of raising capital and investing in large-scale projects. Thank you.
Thank you, Solomon. Thank you very much. Over to you, Betty.
Okay. Thank you very much. Let me make mine very practical. How many of you here in this room have encountered a youth-led organization? Please raise your hand. How many of you have encountered a youth-led organization? Raise up your hand. Okay? And how many of you have supported them? Okay? And how many of you still doubt that youth are truly not capable? Okay. If we are to be honest, that doubt is still alive in many systems, and yet across our communities, we all know that young people are already building, solving, leading, and creating. So my call is simple. Let's replace doubt with trust, replace tokenism with partnership, and replace late recognition with early support, because we young people, we are the future. Thank you.
Thank you. I believe Betty has made my job easier. As we conclude, I think there are three things that were evident to me. And as she said, the youth are leading, they're building, they're drivers of ecosystems, they're leaders. I think Mr. Solomon knows where the money's at, so follow the money. And he'll let us know how to make it traceable, right, and predictable. But I think the 3 points that I carry out of this session are mainly, first, the challenge is not just financing, right? It's translating things, turning capital into viable, scalable businesses. I mean, we know that there are persistent gaps in pipelines, in readiness that we spoke to, in execution, from great ideation to actual execution that needs to happen on the ground. How do we then mitigate that and make sure that we position ourselves, myself included, as development actors, to say, how do we then assist these people to get to a place where we don't easily say, they are not investment ready? So I guess in that component would be appropriate capacity building. And I say appropriate because sometimes capacity building is done in a blanket approach. We assume what the needs on the ground are without actually doing an early diagnosis and helping the businesses develop in a way that is in the context of their nuances. You spoke about cultural differences. You spoke about social norms. The second thing is evident that weak policy coherence exists greatly on the continent. I think limited regulatory harmonization, often we speak to the FCFTA, which is a lovely policy that we have within the document. However, we still find that there are a lot of fragmentations onto the ground, because imagine trying to create one African market from countries that also differ, in their own respective. And also the inconsistent standards. About existing in Ethiopia, but having to change certain things because some things don't apply in Kenya. So having to shift and change that. So how do we find ways to then harmonize these things so that businesses, startups are also able to scale, not only that, but access finances and operate seamlessly beyond borders. Third, I think there's a tendency to also reinvent the wheel rather than build on what is already existing. Mapping ecosystems, like Solomon had said, becomes very critical in identifying who is doing what. And once we know who is doing what, then we know where to fill in the gaps and better align instead of duplicating. I then would like to end by saying addressing this requires just more than capital. It requires deliberate policy alignment, harmonization, right? Regulatory harmonization, and a clear ecosystem mapping to create an enabling environment where efforts are coordinated, businesses can grow predictably, and investors can deploy capital with confidence, and regional markets function as an integrated platform rather than segregated opportunities. And this does not come from me, ladies and gentlemen. It comes from the experts that sits beside me. So I would like you to welcome and help me give them a very warm round of applause. Thank you. I'm not sure if we have time for questions, so Madam Moderator will let us know.
Unfortunately, we don't. Maybe I don't know, if they allow me for only one question, because you've already extended your time. It was a very insightful discussion, but you've already extended your time. We have two other clusters that we have to go through. But if you really insist on asking just one question, I will allow just one.
Yes, thank you very much. Jimson Olufuye is my name again, Abuja, Nigeria. I'm a private sector person, and I've also built associations. But I've not heard anybody talk about maybe a trade organization, an association, or their chamber of commerce, how it has helped them to scale. So are you not in any association? What's the benefit of, do you see any benefits in joining an association to scale up? Thank you.
Who would like to take the question? Of course, please go ahead.
Yeah, so I think associations and chambers are extremely important because they have an intermediary role. So a lot of entrepreneurs, they can't really put their voices to the government, so they can combine together. In Ethiopia, for example, there's a startup association that's established to support specifically innovation hubs in the startup community. But also there is a Pan-African AfriLabs, for example, is within African and also specific countries like Kenya and Nigeria. They have also these networks. It's been very, very effective because they can actually really voice this to the right government bodies.
Thank you very much. Ladies and gentlemen, please give them a huge round of applause. It was very exciting. Thank you. I know you all have questions, but they'll be around at lunchtime, so if you want to speak with them, you can speak to them then. So in the interest of time, we'll now move on into our roundtable discussions, beginning with Cluster 1, which will be focusing on industry, infrastructure, innovation, and value chains. So this segment is very much grounded in practice, looking at real financing solutions that are already delivering results or have a strong potential to scale. So we will transition, and then after that we will transition to Cluster 2, which focuses on sectors that are directly impacting people's lives on the daily. which are water, energy, cities, and urban systems. Again, with an emphasis on practical, scalable financing solutions. To guide us through both of these discussions, I'm pleased to hand over to Mr. Hervé Lado, head of the African Hub at the UN Global Impact. Hervé, over to you. Just a quick reminder, Hervé, you have 20 minutes for each of the clusters. So let's try to make the discussion insightful, but fast-paced.
At what time should we have lunch?
We're aiming for 12:45, so let's keep it short. Yeah?
Okay, let's see what we can do.
Yes, please.
Thank you very much, dear moderator. Yeah, I think in this roundtable, which is actually a roundtable, we just want to deep dive into what works. What we have checked the reality of what are the challenges, and we need to know now what works. And we have some powerful voices from the continent, from across the continent, who have some key elements to help us understand what are the key success factors, and how the examples that they will share can help us scale the project across the continent. So we have two clusters. One is, we organized around the topics of this year that we are discussing at the main Africa Regional Forum on Sustainable Development. And one of those clusters touches upon industry, infrastructure, innovation, and value chains. We'll start with that one. And I will call our speakers just to share very quickly, since we do not have much time, the examples that they have in mind that show how it is working currently and how we can scale up those solutions. So my first speaker will be Mr. Joseph Abramovitz, President and CEO and co-founder of Gigawatt Global. Welcome, Joseph. As you take your seat, your example will be on unlocking private sector funds for solar in Africa. And this is in partnership with the African Union Commission and UNECA and ECA. Even though you are based in Netherlands, you work across the continent, especially in Burundi, in Nigeria, and you are expanding in Africa. Can you share the example? And thank you very much for joining us.
Great. Thank you. And can you hear me? I just want to thank the executive. My best. I'm here with wearing two hats. Gigawatt Global. We're an impact investment platform for utility scale solar in Africa, as well as Gigawatt Impact, which is a new US 501c3. We set it up primarily to work with UNDP. So I want to talk to some people right after this. I'm privileged to be here with Sanaid Dimitri, who's our ambassador to the AU and to ECA, and our local legal counsel, Elsa. I have good news and not yet good news. The good news is there is unlimited private sector capital. It's unlimited, and we keep going around in circles again and again in Africa. Gigawatt and our cluster of companies, we've deployed over $1 billion in 25 utility scale solar fields on 3 different continents. There's no problem sourcing debt and equity for quality projects. But historically, there's 3 things that are missing. Well, actually, now there's only 2 things that are missing. You need proof of concept that the private sector can make money. A lot of my colleagues have talked about de-risking and pre-development, which I'll get to. And the third is you need government to provide sanity and security, which most of the time they don't. I'm sorry to put that on the table. Here's the good news. We no longer need proof of concept. We did the first utility scale solar field in sub-Saharan Africa. This is in Rwanda. We had a grant of $715,000. And we brought $24 million in investor and project finance. That was the first one, 2014. Now, Rwanda, relatively great growth, a lot of stability, ease of doing business. And still, we were not getting a lot of traction in Africa or for the finance partners. So we said, oh yeah, we're going to go to Burundi. We're going to go to Burundi. Average per capita, $257. I mean, half the people annually live below that, half above that. And the diplomatic corps said, you're wasting your time, you're wasting your money. And I was like, nope. We have a 1 to 25 ratio between grant money to de-risk for the studies and our investment money. And if we can do it in Burundi, we can do it all across the continent. Now, we've lost USAID, folks, right? This is why UNDP is so important. Who's here from UNDP? This is why I accepted the Executive Secretary's invitation. So in Burundi, we had the privilege of cutting the ribbon on the solar field with His Excellency the President, who's now the chairman of the entire African Union, right? Supplying 15% of their generation capacity. Now we've been asked to do more. Now, it's not just utility scale solar where you can do this. You can do this on off-grid energy hubs. We're also going to be doing it in Burundi. We'll bring private sector capital loans. We're waiting for a little bit of philanthropic support. You can do for agro-industrial centers, solar-powered, that will quadruple poor women farmers' incomes because you zero out the waste, right? As soon as you have cold storage and value addition, we're doing that in Western Uganda. Also happy to speak to people. All that's missing, right, is that first money. But we have a 100% track record of bringing the for-profit money. And so we want to work in countries not where we're knocking on doors and going minister to minister in circles. If there's a presidential delivery unit, if there's a champion that's high up, we have lost so much money as private sector doing that in so many countries. We're not doing that anymore. We're not signing any bogus, meaningless MOUs anymore. If you want our capital, don't waste our time. We're going right to a concession agreement, right to a bankable power purchase agreement. We can go right to heads of terms. All these documents are bankable. They're ready. So we're here to be really good partners. In DRC, we're going to do metrogrids. There's 100 mid-sized towns of 50,000 and under. There's no national grid where we can replace diesel starting in the city center and go back out. It actually makes sense economically if the first one works. We're looking for a little bit of sugar, folks, just to help to match our equity to make the first one work and then to scale. So we're doing this across Africa, but please don't waste our time. Only if you really want our capital. And there's 600 million people in Africa without access to power. M300 says they want to connect 300 million by then. There's not a chance to get close to that unless you unlock private sector capital. So we have the proof of concept. We've been doing this successfully with the 1 to 25, 1 to 10 leverage of grant. It could even be recoverable grants, so we can pay it forward, right? Project preparation, folks, that's where we turn to all of you and your partners. And I see my other private sector are agreeing. Right? And the third, show us a government that really wants it and it's going to work straight with us and just get to a finish line. Because you guys are in a rush. We have places to deploy other than Africa. So I hope we get to work together. Thank you so much. Shannon.
Thank you very much, Joseph. That is really innovative, and it is a call to everyone in this room. I think I'm sure it is prompting some questions. So before I jump to the next speaker, who is Dr. Tiwalade Adeniyi, I will give you the opportunity to ask one question. I'm sure there is a question that will prompt. Prepare your question to Joseph. And as I present Dr. Adeniyi, Head of ESG at Arise IIP, You will share also an example of a blended finance, but applied to infrastructure investment in the industrial platform, that is REMO. So that is about industry. Now we're talking about solar, this is industry. Coming back to you, is there any question to Joseph? Yeah, please. Okay, two questions, and then we'll move to the next.
Jimson again. Yeah, well, thank you so much for what you're doing. We have a huge energy deficit in Africa, and this is highly welcome. But from your wide range of deployment, has been the recovery rate? Because recovery rate is so important. Has been the investment recovery rate been like, especially in the rural areas? Thank you.
Good, thank you. And the second one was there, yeah.
Yes. First of all, I really appreciate what you are doing in Africa, especially in Rwanda. And you've mentioned also DRC Congo. And my concern was my country, where I'm coming from, South Sudan. As a local organization working in hands with the local people in South Sudan and across Africa. So how can we engage with you in order to empower the young African who have that knowledge of industrial? Thank you.
Great, thank you.
Great questions. My friend from Abuja. In Rwanda, the payback time for our equity was 7 years. The issue in Burundi is access to dollars. Let's just say it's very slow. My investors are not so happy. But Regidizo, the utility, is paying. I mean, it's local currency, they're paying. Each time we get dollars out, it's a struggle. But this is where I think some of the international community, IFC, World Bank, frankly, could be helping with the liquidity. In Nigeria, by the way, we're going to do universities. We're going to start in Borno State. And then exactly, right, all the way up north. You're looking surprised, exactly, because nobody else will invest up there. And the idea is it'll be the anchor, and from there we're going to do M300 mini grids just to break even, not to make money into the community. My brother from South Sudan, we've been working there 10 years. And to the credit, you're going to be surprised to hear this, of the government, we have a bankable power purchase agreement, concession agreement. We have their last bankable guarantee. We have license 001. We have debt and equity letters from the international players. We're missing 2.2 million to get to financial close. And every time we get close with a facility, something happens in South Sudan that freaks out the investment committee or the grant committee in those, and we're still on hold. We've identified now a source that would be willing to put up those funds. And the finance minister of South Sudan needs to sign the letter to this facility. They keep changing finance ministers every time we're close to signature. My team is actually flying back this week. Tomorrow, they'll be landing. We need that signature. And if we do the first field in Juba, it'll bring down the cost of power tremendously. And we have first rights on some of the other regions. Once we're up and going, we're happy to do corporate social responsibility. You were talking about organizations there. I don't want to get your hopes up yet, because we've been 10 years trying to get this to the finish line. And we're up against a race of elections and a lot of instability. We've already deployed our money. We just need a little bit of the extra, and it could be a recoverable grant for those of you who may have it, and we'll get there. In South Sudan, the tariff is relatively high. I think we'll make back the equity in 5 to 6 years. Thank you so much.
Good. Thank you. I understand if there is any way to facilitate that signature as well, it is welcome. Yeah, thank you. You can stay, please. Yeah. Dr. Adeni, the example you will share with us is about Nigeria. It is about infrastructure and in the industrial sector. Please. Yeah. Thank you. Yeah. Welcome. On the white one. White one. White.
Yeah. Okay. Thank you very much for that. So I work with Arise IIP, and we are
been big on building industries. So what we do is to create industrial platforms, and that is to build economic zones. We started this back in Gabon as far back as 2010, and we are currently operating in 5 countries, with constructions ongoing in 9 countries, where Nigeria comes into. And so I sit at the ESG desk, which means I chase a lot of sustainable finance in terms of capital. One of the things that really starts when it comes to this kind of projects is how to get that right blend of capital. Because you are dealing with a zone that you have to rely on tenants. And tenants can only come if you are securing that zone and you are telling them that whatever they are producing in that zone can be exported or can be sold internally. So thinking about things like power, road networks, we've talked about power earlier, so road networks and how to actually power up the zone. Because in Africa, for us, we are more concerned about industrialization. We are tired of Africans selling out raw materials. We want them to be processed. And to do that, you need these industries. We are not going to be arrogant and assume that we have the technology. Some technology we do not have. We have to import the technology. But the most important thing there is how do we transfer to make sure that we have our own industries. So we started the project in Nigeria in 2023, and one of the biggest challenges you would have in any kind of infrastructure project that has to do with land is land. Land in Africa is gold, and Africans don't give up their land easily, no matter the story you want to tell, no matter the story. And the way we operate in Arise, similar to what Joseph has said, is actually around the government level. So if you want us, we will come, and we are not interested in signing state-level MOUs or local government MOUs. No. We speak at the federal level. The federal then introduces us to the governor, and at that level, we sign the agreement. We don't want situations where you have issues around land tenure and things like that. And once that is secured, that now comes in as the public-private partnership. But my colleague also mentioned public-private community partnership, which is typically what you need for an economic zone, because you're talking about labor of almost 40,000, 50,000 people. So in Nigeria, that's what we're trying to achieve. But our biggest plan there is to build the largest textile factory in Africa. It's called the Giga Textile Park. It's going to be over 850 hectares. It's located in Ogun State. We have done a demo, a 50 hectares demo in GDIZ, the economic zone in Benin. We did a demo there. You all can visit. It's one of the best textile parks you see in Africa, from raw cotton all the way to the cloths that we wear. And some of them even come to Nigeria as well. So that's the plan for Nigeria. And that is already being supported with AFRSD Bank, AFDB, and of course, AFC, one of our biggest partners. And to people in the room that, he has talked about capital, I'm talking about big infrastructure projects and capital, and then some can also come and say there's no capital in Africa. Well, there's something we always say is that if you get the structure right, capital will actually be chasing Africa, not Africa on the other hand chasing capital. And that structure is the ecosystems, the policies, and the partnerships. We need those 3 things, and that is what we do at Arise. We didn't go to Nigeria and say, oh, Tiwalade is in Nigeria, we know this, and let's go and take land, over 10,000 hectares of land to build a zone. No, we had to rely on partnerships, rely on government, and even rely on organizations that are already operating zones within that particular area. We can always see ourselves as competitors, but at the end of the day, we're all partners. The African GDP will let you know that we are not competing yet. No matter how many zones we have in a state, we are not competing yet. For now, we are all partners, because we've not reached that level in terms of capital yet. So that's how we've been able to succeed in Nigeria. We've broken ground. The president has launched the zone. We have an airport not too far from it, and construction has started. So things are going on fine in that area. Thank you.
Great. Thank you very much for this example. You were talking about the example.
I've just volunteered to do 90% financing for the energy for the textile factory. So.
That is the deal. Deal done here on stage. And just about Arise, it's not the example you have shared, but Gabon is increasingly known as one of the success stories in Africa in terms of industrial zones. There it is on wood, timber, and
Yes, timber.
Yeah.
And it's an area that is very, very close to my heart because I'm an environmentalist at the core. And anytime we mention timber trading, people always think about deforestation. But what we did in Gabon was to actually have that model of plants to cut down one. And our timber even has traceability. So when you actually buy from Gabon, you can actually scan QR code and see the traceability of timber. So we operate the ports and we also partner with all the timber industries that are there. Olam was the initial partner that we worked with to start that project, and we've been doing that since 2010. We plan on doing that also in Congo now, Congo and the DRC. These are countries that we know need the industrialization. And, you know, private sector sometimes are afraid to go there. But with the right partners, you can. And I'll use this time to also mention my brother Solomon. We are about to enter Uganda as well. And because of partners like that have helped us to, you know, get things started on a zone in Uganda, we can now come in and do the necessary infrastructure to build the industries. Yeah.
Great, thank you very much. I call Mr. Stanley Kinemelo, Senior Manager Sustainability for CRDB Bank, which is a leading bank in Tanzania. You will talk about climate adaptation technology. We know that climate adaptation is really missing interest and funding, and we have an example here from Tanzania covering finance, agriculture, climate adaptation technologies. Please elaborate a little bit on it. Thank you.
Yeah, thank you very much for this session. I'm coming from United Republic of Tanzania, from CRDB Bank PLC, one of the biggest banks in Tanzania. Yeah, currently we are implementing a program known as Tanzania Agriculture Climate Adaptation Deployment Program. This is a unique program which is being co-financed by the Green Climate Fund, whereby the bank also is chipping in by 50% of the program. The total program cost is $200 million, whereby from GCF we got an approval of a loan facility of 70 million. But the rest of the financing from GCF is in the form of a grant component and insurance premium for the smallholders farmers. And this program basically aims to enable farmers to adapt to the impact of the climate change. As you all know that African countries are faced with the climate impacts. So this facility is specifically for food crops, and it aims to finance adaptation technologies or practices. And to mention a few of the practices, it includes that such as drip irrigation solutions, solar pumping irrigation solutions, post-harvest slow solutions, for instance, construction of warehouses. So this is the program which we have been partnered with the GCF. And with this program, we aim at reaching 1.2 direct beneficiaries and 4 million indirect beneficiaries. Of course, this program is going to be implemented in 20 years because we have got a concessional loan facility from GCF, whereby the bank is going to repay that loan in 20 years. And currently, we are at the grace period. We don't pay principal, but we are just paying the interest which is accruing. So in driving these SDGs, this is a very strong case for us because it embeds the SDG number 13, which is climate action. But of course, part of the target of this program is to reach women at least 35% of the beneficiaries. And currently, we have so far achieved to have a level of 48% as women who have been able to access loan facilities from this program. Thank you.
Thank you very much for this successful journey on climate adaptation technologies. I'm sure you were listening this morning very carefully to Mr. Asfal about the lending solutions, and digital was at the core of that journey, and I'm sure you have got some inspiration, the same as the Coop Bank is listening to you about the climate adaptation, as you are targeting the most vulnerable, the agricultural sector, the small and medium enterprises, and that is really at the core of the SDGs. Please bear with us, ladies will come soon. I will call now Mr. Michael Adenu, who is the country director at Oxford Policy Management, to share also an interesting example. And then we'll shift to the second cluster, which will be on water energy. We discussed a little bit energy, water energy, cities and urban delivery systems. Welcome, Mr. Adenu.
Thank you very much. Now it's very difficult coming after three distinguished colleagues, but let me share some experience that we've done here in the region, in the climate financing space that has a real impact to date. Yes, it's been said that there is $1.3 trillion gap filling the Africa NDCs up to 2030. But taking along Africa only, there is about $4 trillion in existence that could be leveraged. Now, it has been said by colleagues in a previous panel, there is a growing challenge where it is one thing to know there is a capital, but it's another thing if that capital flows as intended to climate-related funding streams. As it's been said, there is fragmentation challenge where programs and projects are not well organized enough so that they could be able to be leveraged. So there is a gap in terms of providing aggregation challenge. There is a strategic cost associated with funding fragmented programs. So de-risking this would require a new way of thinking. But also there is fragmentation of policy, or harmonization of policy requirements are there. So for us, the Climate Finance Accelerator Program, funded partly as a technical assistance provision within the Department of Energy in the UK, helped to address these three key challenges. In terms of input, we've provided technical assistance trying to address this burning challenge of creating fundable and bankable pipelines from a climate perspective. But having the pipeline only is not going to solve the challenge at hand. So that would require a clear linkage between intermediaries, in this case, the City of London capital market, as an entry point where we can leverage these funding gaps, mobilizing resources from the private sector. As a result, we've managed to have an output that projects that we've supported have managed to leverage the technical assistance provided and the environmental conduciveness managed to secure funding in this space. Now, in terms of, I got my slides now. Okay, so in terms of, I think, output, it's important to note, scale is always going to be, I think it has to be, this is the gap part. Mm-hmm. We have to go forward. So this is what I've referred to. In terms of pipeline, there is a fragmentation challenge. That means we need to be able to aggregate the projects. In terms of to de-risk, we have to be able to structure it in a way that could be able to absorb some of the risk component. And there is a requirement for policy harmonization so that investors can have, the NDCs can be able to be realized having the right regulatory environment. Next slide. As I've said, this is the mechanism. We've started off having a technical assistance facility that helped to mobilize using a $12.4 million, leveraging the existing infrastructure, market infrastructure from a private sector, which helps us to close deals that unlock private capital in this case. Next slide. So these are some of the projects that we've done in the region. We have projects here in Egypt, Nigeria, South Africa, and Uganda, helping align to the Sustainable Development Goal objective of creating the energy industry infrastructure, water in the value chain that clearly aligns that if the right capital could be catalytic, the private sector funding can be able to unlock significantly. Next slide. In terms of the inner workings, we look into each market to be unique. As a result, we'll conduct a thorough understanding of the market, identify a core process that we would be able to take potential fundees in this case, and at the end, we would be able to generate the necessary capital, listing them in the City of London Stock Exchange. Next slide. Now, it's always important to put it into perspective. Since we've started this program, there has been over 200 projects that's been supported having a technical assistance. From these projects, about 50 of them managed to secure funding at an aggregate number of $500 million. So this is a real impact that shows when some of the hurdles can be addressed, there is a private capital that could be leveraged to unlock so that climate finance can be realized. Next slide. Since we've started, there's been a significant progress, and we're hoping we would be able to increase from our initial 4-country intervention to 12 with 2029 objective, where we would be able to have over 800 or so projects being able to have this technical assistance facility so that the deal flow could be much bigger. Next, in order to make, sorry, next slide. In order to realize this, it is important to address 3 critical points for success. First of all is getting the basic pipeline in line. So fundable projects has been said time and time again. It's important our projects are aligned and they could be funded. Number 2, there is a risk premium that we understand to be much bigger than what it is. So we have to collectively work to address this, both providing technical assistance, but also a broader sense coming together and demystifying this area. But even addressing the first 2, we would require strong delivery. It's one thing to require funding, but it's completely other to make sure our implementations are solid. So these are the points that I've shared from our experience, and happy to take on having conversation further. Thank you very much.
Thank you very much, Michael. That is really interesting. You are adding to the bankability and the structuring of the project. You are adding those elements about the risk and the delivery, the effectiveness of the delivery. Now we are done with this cluster, which highlights actually the simple fact that there are unlimited funds available. That is something we need to take away from these discussions. It is a matter of structuring, it is a matter of managing risks, it is a matter of delivering effectively. Thank you very much for the conversation. You can stay actually, because we have enough seat here to welcome the next speakers for the next cluster, because at the end I will leave the panel, I will leave the audience with 1 or 2 questions so that we can close appropriately. Allow me to call now the next speakers for the next panel, the next group of speakers, which is on water, cities, and urban delivery systems. The CEO of Jospin Group in Ghana, Mrs. Florence Larbi. Please join us here with a round of applause. Thank you. You will share with us, Jospin Group is a leading group in Ghana, one of the largest groups in Ghana. You will share with us a project on waste management, waste sanitation, circular economy, and how this project, which is also about blended finance, we will deep dive into blended finance this afternoon, but we will have a test, an additional test of that with your example. Thank you.
Thank you very much for having me, Lado. Good afternoon. And I take it from where Joseph left off, that there's a lot of financing. And I am coming to talk about not what is possible, but what I have seen and witnessed and handled. And so we have been able to secure a lot of financing from various countries. Talk of Austria, Sweden, the Netherlands, even Belgium, to put up infrastructure, waste management infrastructure, specifically processing infrastructure. And what makes it beautiful is that we started with collection. And I was there when the business started, right when I was an HR manager. And then I became a general manager, managing director, and then to COO of over 40 subsidiaries within the environment and sanitation space within the Jospin Group. So the Jospin Group is actually the bigger umbrella group operating in 14 sectors of the economy of Ghana, but then it's divided into about 6 clusters. And I manage the environment and sanitation space. So I could give specific examples of what we got from Pureco. That was equipment financing. So Pureco supplied us with waste water treatment plants. And the ECA was Hungarian Exim. The bank was Hungarian Exim. They gave us about 10 million euros. Then we came to Comtech, Austria. OEKB was the ECA. And then Oberbank. Oberbank gave us 14 million to purchase 5 MRF plants. Now, Comtech Germany, also using Euler Hermes, and AKA Bank gave us 17 million. And then we also purchased a number of plants. Then Lubo Systems, Atradius. We are home, Joseph. Atradius using AB and Amaro. They gave us 30 million euros. And so this is just to mention a few. Now, in Sweden, we had Scania giving us, Scania using EKN to also give us a number of, an amount to purchase over 20 trucks. Now the last is EcoSteril, Belgium, using Credendo. Credendo as the ECA, and Credendo Bank gave us 26 million. What am I saying? I'm talking about what is possible. And he talked about structuring. It isn't that the finances are not available, capital is available, but the structuring, the risk management, and the enabling environment You know, ECAs will work with government, yes. So public sector will not have to do it alone. Private sector cannot also do it alone. We're looking at partnerships in our SDGs. These partnerships are of ultra importance. And when the partnerships come together, the enabling environment is created. Then on the international scene, the country risk is also minimized. Of course, we had our fingers almost bent when Ghana was downgraded. And so on one of the scenes when we went borrowing, they told us, you are okay, your balance sheet is okay, but your country is not credible. Your country has been brought down and we are at risk. But then, fortunately, within 2 years, this has been surmounted. And our country is doing great now. And so my private sector participants here, I'll bring you news that it is possible. And we are still paying. In fact, the tenure is between 7 to 10 years. And rates are between 2 to 5%. Thank you.
Thank you very much for this experience, a very inspiring experience from Jospon. It is possible. So that is the key message from your intervention. Allow me to call, please keep your question. We will come back to that at the end. I'm calling Madame Onitse Dadi, a founder of Sustainabiz, coming from Botswana. Welcome, Madame. Good. Madame Dadi will share with us an example from the rural service delivery in Botswana on unlocking climate finance with Universal Postal Union Climate Finance Facility. Madame Dadi, yeah, please.
Thank you very much. Good day, everyone. Thank you very much. My case study is on unlocking climate finance for rural service delivery, a case study by Botswana Post, where a solar facility was installed in some of the rural post offices. How many of you are familiar with ESG? Question in the room? ESG? Do you regard it as a compliance framework or as something that can unlock capital?
For those who are not familiar, environment, social governance.
Yes, environment, social governance. Where do you classify it? Compliance? Okay. My case study will show you that ESG is more than a compliance tool, and is actually a framework that we can use to generate finance. My name is Onetsen Dadi. I'm the founder and CEO of a company called Sustainabiz Consulting. We are ESG consultants. We offer advisory and training services. We actually are the first company to be accredited by a local accreditation body to offer training programs. We train across sectors, right from corporates, SMEs, individuals who want to transition from their traditional professions to more professions that engage emerging issues. So the problem and opportunity statement comes from the fact that in Botswana, post offices serve beyond just delivering letters. For us, the post offices provide a platform where they deliver financial services, social protection payments, and government services to underserved communities because they have a rural footprint. So the challenge that the post office was facing is that there was unreliable energy supply, particularly in rural areas, due to a systemic risk to service continuity, and that resulted in interruptions in financial services delivery, affecting financial inclusion as well as public infrastructure, public service delivery. As indicated for us, the post office serves beyond just delivering letters. We can actually use the post office to renew our vehicle licenses. So if you are in the rural areas, instead of trekking all the way to the city, you just go to the nearest post office and you access such a facility. So this electricity interruption or power supply interruption, it appeared as an operational challenge. However, on depth, instead of just on the surface, it was just an operational issue, but it had to be reframed as a climate resilience and development finance opportunity for it to become impactful. So the management of the Botswana Post actually packaged this project where they were now looking for funding to install solar panels into the rural, the post offices in the rural areas. So they partnered with Universal Postal Union, which is a UN arm that is responsible for the postal services, and managed to mobilize approximately 1 million pula in grant funding to install solar infrastructure across selected rural post offices. We may look at it and think 1 million pula or around 70,000 USD is very small, but the impact is huge. And I'll demonstrate why it is huge later on. The project was successfully positioned.
In 2 minutes, Madam Daddy. Sorry, just to manage time, but I will let you continue. Just keep as short as possible.
I will be short, yes. So the project was successfully positioned as a climate resilience and social impact investment aligned with SDG 7, SDG 10, and SDG 13. And what became more critical in terms of packaging was that the project sponsors, they actually made sure that they included the theory of change into the project conceptualization. They made sure they had predetermined or predefined impact KPIs. And this project was supervised by the board of the Botswana Post, which means there's a governance aspect to it. So the deal was structured that it was ESG focused, and it had strategic partnerships, and it was impact aligned, which then shows us that in packaging our deals, we need to make sure that we look at the fact that the interest of the investors, which is traceability and impact tracking. So when we apply ESG principles, we are going to be able to meet the investors' expectations in terms of monitoring impact, in terms of packaging for impact, and being able to track where the capital actually went. So all the time that I was in the room, we're talking about traceability, we're talking about how there is unlimited funding, but the question is, do we package correctly? So for this post office project, the results were the 5 rural post offices solarized, over 3,500 beneficiaries reached, improved reliability of social protection disbursements, reduced reliance on diesel, lowering carbon footprint, and strengthened resilience of rural public infrastructure. And this model is scalable in the sense that it can be replicated across all public service sector, and it be adopted to deliver across schools and across hospitals or the health facilities as well. Thank you.
Thank you very much, Madam Daddy. Your example shows that it's not only about large infrastructure or large projects. We can have that replicability also on smaller projects that have high impact on the ground. Last but not the least, Mr. Hassan. Hassan, yes, I will leave you my seat. Mr. Hassan is the CEO of Africa Holding, coming from Rwanda. When we met 2 years ago, Mr. Hassan, you told me we build affordable houses and we align our approach and strategy on SDGs. And a few months later, we joined the Global Compact because we felt like it is really the place you are very much aligned thank you for joining us here. What we want to hear from you is that example of project on affordable housing in Rwanda and beyond, and key success factors and how you are succeeding in aligning all that on the SDGs.
Thank you very much. Thank you. My name is Hassan. I'm the CEO of ADHI Africa Holding Limited. We are a company with headquarters in Kigali, but we do have operations in Rwanda. I mean, apart from Rwanda, we are just penetrating Uganda now, and we've also got some operations in Djibouti, and we've just signed an MOU last couple of weeks ago during the African Urban Forum 2 in Nairobi with Somalia. You know, when we are talking about affordable home, we need to sort of like take it into context. I mean, in Africa, we have 53 million housing deficit. So if you even take like a random figure of $20,000, you're looking at almost, you know, $1 trillion, you know, sizable opportunity for developers like us. I mean, we are not in competitions. It's 53 million. We need to have other developers there as well. But then again, if you look at the market interest rate all across the African regions, it's roughly between 9 to 12 to 17. And that sort of like eliminate almost 90% of the people, because if you just concentrated on the 3% who are able to sort of like justify that they are actually able to pay that mortgage, you are eliminating almost 90% of the population as well at the same time. So one of the things that we've actually done when we first started in Rwanda was to sort of like, because whether we like it or not, at the private sector, our number one stakeholder is always, you know, the public sector, you know, whether we like it or not. That's a fact. So we have to go there, sit down with them and see, hey, we are developers, we are trying to bring in innovations into the construction technology that we want to sort of like put in place for mass housing. How can we work together? Can we sort of like look at the land to come in as a, you know, on a symbolic fashions, or can you sort of like reduce the cost of the land so that whatever you reduce on the upstream, that can only benefit the downstream, and that's the end buyers by the end of the day. So those are some of the things that we've kind of like worked with the government of Rwanda. But as well as a private sector, we also have to come up with a way where we can actually reduce our cost per square meter. And one of the things that we've kind of like did was to sort of like decompose, you know, how much $1 per square meters equate to a construction build. So obviously the gross amount was 38% was the material, and then that was followed by the bulk infrastructure, which was about 25%, and then labor was roughly around 10 to 15%, and then the cost of financing, that was the biggest hurdle again, you know, because whatever interest rate that we borrow, we're just gonna pass it on to the end user. So we have to also see in terms of the construction costs how we can innovate, and that means we have to really build how we can reduce our cost of, because construction by the end of the day is brick, cement, and rebars, you know, reinforcement bars. How can we sort of like innovate around that and sort of like reduce, you know, the volume and the weight of those materials, whereby passing on that saving and reducing the cost per square meters. That we were able to do that, and that's one of the reasons the mass housing was actually awarded the Advanced Edge, the first one in Africa, you know, from IFC in terms of the most sustainable and affordable housing development. And then we looked at the cost of financing. The cost of financing, you know, as a developer, you have to have a skin in the game, you know, first loss capital. Because first loss capital, you have to have that skin in the game. But then again, you have to see how you can sort of like build that capital cost. And then we sat down with the government and we say, look, how about us delivering, you know, on the bulk infrastructure especially? How about if we sort of like align it to your green agenda? Can we sort of like do climate adaptations? Can we sort of like do climate resilience so that the project can sort of like demonstrate that it's actually aligned within your green credentials and also through the climate finance? And that is one of the things that we've also achieved. I mean, just phase one, which is like the proof of concept, we were able to sort of like save almost 160,000 ton of CO2. Now, can we monetize that? But that's where we've kind of like hit a hurdle there. There is no methodology available in the built environments whereby you can sort of like qualify and quantify how much you are actually saving. So this is some of the things that we are kind of like doing in terms of the RMV. That's one. Now, the other thing is, in terms of, as a company, we also have to look at ourselves. You know, we are part of the UN Global Compact, and I think I've mentioned that to you the first time that we've actually met. Can we sort of like do the vertical integrations? How can we sort of like reduce our cost per square meters? Can we buy raw material and then process them on site and also engage some of the artisanals who are actually present in the countries? Can we engage them to do the ports, the windows, the doors? Can we get them to do the kitchen units? And then us, we just concentrate on the bigger development in terms of the way we basically do is we buy the raw material of light steel framing and then we kind of like process in country the light concrete, and that's sort of like make the whole development lighter in terms of volume and in terms of weight. Now the other thing is we don't have the skills. We also have to develop our own skills, you know, and that's a mandate that we've actually took upon ourselves. And then the capital stack, that's where it was actually very important. We have to have the skin in the game. We also have to sort of like align the projects with the government policies and framework in terms of green development so that we can sort of like speak to the DFIs and say, look, we have this project. Can you sort of like come in on a concessional loan fashion so that the cost of borrowing, instead of reaching double digit, can we actually reduce it to one singular digit? And then adaptations, the bulk infrastructure in terms of climate resilience and climate adaptations. Can we sort of like business as usual? It might cost you, let's say, 1 million, but if you sort of like align it with the climate adaptations, it might cost you 2 million. On that 1 million extra, can you sort of like get it as a grant? So those are the sort of things that we've basically done in terms of vertical and horizontal integrations. Thank you.
Thank you so much. Well, first, I want us to first clap for Arise. I'm a student of Arise, and exactly why I've seen them change nations. I've been working closely with Arise for the last 5 years, and hopefully very soon we shall do a JV together for Uganda. But my question is to Mr. Joseph. the experience in power and investment in energy, you are aware now what's happening in Uganda. We are currently discussing a PPA agreement with the government, and the shift from a take or pay model to a take and pay model. How is that affecting the financial modeling that has been structured that way for years, from your experience? Thank you.
Uganda is one of those countries that we think we believe in as investors, but the government is not speaking with one voice. I'll give you an example. You've seen the strategic plan for energy. It's very ambitious, very ambitious. That's why you have such a deep pipeline, and we're also going to do the solar-powered agro-processing. But on the other hand, the regulator doesn't want this. You can't even get a feasibility permit in Uganda today to do energy projects. It's craziness. It's and then we had a ministerial directive to overturn that, and they didn't comply. There was an election. So the application to get a feasibility permit, to be able to do your studies, to be able to show your investors, is as if you're applying to build a nuclear power plant, in the middle of New York City. It is completely unreasonable, overloaded. Most of the answers that you need to give, you have to be able to have done the studies to be able to do so. And now they're saying, no, we're not going to give even a permit to begin the studies until we do a whole national grid assessment, even though we have proven in Kinjojo near Fort Porto, the grid is unstable, the local people want it, the utility, local people all say yes, et cetera, we're willing to pay for the upgrades. And so Uganda is not encouraging, because the energy ministry, and look, the National Development Plan 4 is also very, but in terms of the take or pay to something less bankable, they did pass a law 2-3 years ago about wheeling. You can do private off-takers, and I think in the end, we're in the West, so maybe we'll be able to sell some to DRC as well. But they're making it difficult, and it's worrying our, we have term sheets. It's making it extraordinarily difficult right now. And this is where I'm hoping the interplay with ECA at the highest level of government can kind of incentivize good behavior so we can complete our investments, and that so you, who have a bigger pipeline than we, will be able to succeed.
Thank you for your thoughts. Thank you.
Thank you. Let's take the two last questions before we come back to you.
Thank you. I'm a former UNDP resident representative and UN resident coordinator in Rwanda. So I just want to make one comment. Listening to all of you, I guess that the major conducive way of finance and climate and all those aspects are related to how do you articulate leadership and management and clear governance and have accountability mechanism. Because in Rwanda, you have a clear vision that is translated in how you build your human capital, your institution, your system, your ecosystem, and how through Imihigo you are accountable for your performance. So my plea is really maybe stars are aligned, because the current UN ACA Executive Secretary was the Minister of Finance, Dr. Claver Gatata, when I was there. My plea is how in Africa we could harness the rich experience we are having and put it really available in a platform, and that's what we are trying. I retired in 2022, and I have set up the Center of Excellence for Leadership and Management for Africa's Development, and Rwanda also putting emphasis on youth and women. To answer to Betty's question, we started Youth Connect there, as I was resident representative of UNDP. It's now rolled out in 30 African countries. This is how example can emulate in order to achieve. One last question I have for all the team. You kept on saying blended finance. In my humble view, the issue in Africa is how you made your financial sector more sophisticated. You have your capital market, your risk capital market, your angel capital market. You have the mobilization of your domestic resources, and then have how you manage your fiscal space in order to create a conducive environment to leverage domestic resource mobilization. And if you are interested, you can go to the last report. I was a member of the sounding board, financing development, the primacy of domestic resource mobilization in 2022. Oh, I hope I didn't take too much of your time. Thank you.
Thank you very much for comments and contribution. The last one was.
Thank you very much. The panel has been great, a lot of information, and I'm highly encouraged. In fact, I can testify to Dr. Dini's presentation because that project is in my community. So thank you. My question is general because at this point, there is a kind of statistic showing that we're just 35% on cost to fulfilling or achieving the Sustainable Development Goal. And then maybe 48% is quite slow, and then 18% is like we're progressing. So how can we really fast track? Can we still achieve the Sustainable Development Goal by 2030, please?
That is the last question that we have. 1 minute to conclude. The question that was addressed to you, directed to you, but also react generally to that question because it opens a venue for discussions at the AFRSD, but also within the UN that there are already reflections on the post-2030 agenda. Can we start with you, Madam Betty?
Thank you very much for the opportunity. As he was asking a question, I'm just reflecting on what is going on back at home. I think sometimes it's not that there is nothing being done. Sometimes the issue of Africa's data system and reporting becomes a bigger problem, and we fail to account because we don't have systems in place to help us track what we are doing. So that is where our biggest gap is. Where back home, we are now working on a national ESG framework, and I believe that is going to help in terms of accountability and trying to encourage everyone to be doing something and doing it in a way that it can be traceable and it can be reported on. So I believe the efforts will go recognized. I recently completed another assignment where I was reviewing or evaluating a UN, the agreement between Botswana government and the UN system. And what came out strongly, the reason why I'm bringing out the data issue, is the fact that most of the projects that are done outside a UN partnership, they go unreported. So they are never part of the bigger SDG reporting structures. So they go unrecognized.
Yeah.
Thank you.
That is a very good point about connecting private sector initiatives and engagement with the national and government monitoring system. That is a big challenge for all of us.
Yeah, thank you. When I talk from experience from my country, I think there's importance of government engagement because when we were accessing funds from GCF and then we got approval, but part of the technical assistance is being directed to the government ministry and agencies. For instance, Tanzania Meteorological Agency, Ministry of Agriculture, the Vice President Office, which is responsible for environment. So you find that when we are trying to push, but you find sometimes the governments are slow in action. So it's very important for early engagement with the other stakeholders so that these projects can be moving smoothly. Thank you.
Thank you, Mr.
Thank you very much. I agree with our colleagues who've noted the importance of data and evidence, but also to make climate, I think, blended finance work. It's important, the data and evidence is very important, but local resource mobilization could be able to be leveraged to crowd in funding, specifically in some of the jurisdictions that we've seen. We've managed to do that effectively. Within the PFM space, fulfilling our obligation to NDC work that we're doing, yes, I agree, there is no enough data or insight within the PFM systems to identify what are the portion of the budgets that we have that we are allocating to the climate finance. So the more we be able to generate this evidence, it's easier to leverage it as such. There is an importance in terms of technical assistance, which is going to be crucial both for implementers, but also regulators and the like, that would be able to make a difference. Thank you very much.
Technical assistance was your keyword. Mr. New, thank you very much for your contribution.
Okay, hello everyone. Excited that two people had mentioned ARISE, but to go into perspective, I think that's why for us we are focused a lot on industrialization, because it actually moves a lot of SDG targets across the finish line. And I'll not re-echo what my colleagues have said on data. But when you look at industrializing Africa from Tanzania to Gabon, all the way to Kenya and back again to Sierra Leone, we are doing all of that. But again, we have to find out to connect all of those dots and make sure that when the government is writing its voluntary national reports, all of those data are there that can actually show the progress. Just a quick one on blended finance. I know Nigeria is one of the countries with 10x for the performance of the Nigerian stock exchange. We have a lot of private equity firms. We do very well in terms of DFI funding. A couple of years ago, we also had challenges with dollars. We couldn't get dollars out of the country. And it had a lot of effects. You know, some people had to take their money through Mauritius before they could come to Nigeria. And I think that as much as we talk about blended finance, being able to raise capital in local currency is something that the DFI should really be supporting a lot of African countries with. Thank you.
Thank you, Mr. Andy.
Just very briefly, I love the SDGs. I mean, it feels like, you know, the prophets from the Bible are speaking about equality and food and poverty and justice and all of these things. And yet 2030 is essentially now. Our colleague from the bank said ideas to execution, right? Everything has to be about execution. If you care about women and equality or clean water or ending poverty, what is amazing about SDG 7, renewable energy, and 13, climate action, is that that unlocks your ability. How can you have education, right? If today, if you don't really have energy, how can you have healthcare if you don't? How can you have, you know, jobs for all? You know, any of these things, we have in our hand the key. The key is SDG 7 that unlocks all those messianic goals. So we look forward. And number 17, I think, is partnerships. We're here to advance partnerships to be able to unlock all of that. Thank you.
Thank you very much. We have in our hands the key. That's the key.
Thank you very much. You know, when we embark on us being a member of the UN Global Compact, we've just said, all right, we are developers. We contribute to the greenhouse emissions. Let's just take one goal, and that was the climate actions, because the built environment contribute 40% of the greenhouse emission, and that's a fact, you know. And then when we start to look at, you know, that one SDG, and we start to decompose how we actually deliver our business model, I think most of the businesses are actually covering a lot more, but they are not just reporting. And I think the reporting mechanism can greatly improve, because we started with one, and by the time we finished, we realized that we were actually taking almost 14 SDG goals. So I think that might be this. I mean, look, we are all business owners or leaders or whatever. would you not want to have equalities in your workplace? Would you not educate your workers? Would you not sort of like approach, whenever you develop in a business or whenever you want to sort of like go cross-border, would you not want to have a partnership? And whenever you want to have that partnership, just associating yourself with the financier, that's a partnership. Innovate in your business. Every day, all of us in the private sector, we are trying to innovate. And that's a goal itself. How can we innovate? So I think all of us are actually doing it, but the reporting mechanism can be improved. And I just want to go back to one of the things that was actually said in terms of climate financing, in terms of like, capital, raising the capital. The capital is there, but there has to be a credible, bankable projects that has to be put on the table. And PPF sometimes, it's a great way to sort of like actually put those elements together for you to actually demonstrate that you have a credible project. So thank you.
Thank you, sir. Reporting mechanism, that is still a lot to do on that front as well. Madam Lapi, you have the...
Yeah, mine has to do with it, from my personal observation, is that these goals are more documented on our PCs or in documents in our closets more than having them on the agendas of our daily meetings and actually executing them and tracking them, as Indadi said. So let's not just have them on our PCs or in our documents, but from the boardroom, from management meetings, the SDGs or execution of the SDGs must be top on agenda every day. It is what we talk about that gets our attention. That also leads to execution. So after talking about it, awareness is created more and more among, sometimes, yes, the awareness is created amongst those who have the opportunity to visit meetings like this. But what about the other staff members? To what extent do they understand these goals and how are they applying them to their day-to-day operations? Let's break them down and mainstream them in our operations, and we'll get to talk about them and we'll get them executed and tracked. Thank you very much.
Thank you. A round of applause for everyone. That speaks really about the knowledge of the private sector about on the SDGs. Sometimes people may think that the private sector knows what are the investment opportunities in the SDGs. It is really not true. Generally, it is very, let's say, high-level knowledge. And I think in the past years, the UN and the UN system has made a great progress in socializing what we call the cooperation framework between the country and the country and the UN. There is a cooperation framework in each country. There are national development plans that need to be really explained to the private sector and built also with the private sector so that they see what are opportunities, investment opportunities that can be tied to the achievement of the SDGs. That is the last word for this session. Thank you very much for your attention. Thank you for your engagement. Thank you.
Likewise, right? Bringing energy to...
Thank you.
We started in Rwanda. Very nice to get
Exactly. I will provide you the roof.
Thank you, everyone. So I will forgive our panelists and our moderator for stretching the time because it was a very interesting panel. I couldn't, tell them to stop. But with that, we will move to lunch. We have a 1 hour break for lunch. It will be downstairs at the rotunda, so the ushers will show you where it will be. Please come back on time, and we have other sessions to delve into in the afternoon as well. So thank you very much, and I'll see you in the afternoon.
Sorry, yes.
Thank you. Yeah, it's where all the pollution is. Different one. It's different. Oh, wow. So are you headquartered in Kigali or? No. We did the field at the Orphan Youth Village. Definitely. 2014, we did the first solar field in Africa. Yeah. For President Kagame. Yeah, the Eastern Province. We're talking now.
What about the Eastern Province?
I go to Shalom Youth Village. 8.5 mega. We're talking now to REG, the energy utility, of floating solar.
Oh, nice.
Your rooftops is too small for us, but if you have
the
it's too close to M23. Oh, there's plenty of lakes.
That's what we think of today.
Yes. How many years? But we didn't know you. We didn't know you. Yeah. I don't care about them. I care about you. You know what I can. Amazing. So let me tell you what we want to do. Take a picture of my card. Okay, but you have a card? Someone else? Okay. So here's what we want to do about Botswana. We want to do something huge, like $1 billion solar field battery storage to Southern Africa. Are you the right consultant? Okay. That's what we want to do. That's what we want to do. So make sure you get your phone right now. Where you get it? Joburg last year. Weldon Turner, we were, no, but my team was there. Take a picture. And then, what'd you do?
Yes, okay, lovely. Let me get my
So we were in 2 or 3 rounds of tenders that always got canceled. I didn't know about that.
Yeah, well.
But you're private equity or you yeah? So what you want is the opportunity to be equity in my solar business. It's an annuity. Do a World Bank or similar cash flow. That's what you want.
I have some videos. You have projects, a lot of projects that
So many.
Just a quick reminder, lunch has resumed and you only have 1 hour to get back here, so please proceed downstairs to have lunch. Thank you very much.
From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry.
Welcome back, everyone. I hope it was a good lunch. We'll be proceeding in a few minutes, but feel free to sit up front. There are many seats available up front, so feel free to sit up front. We'll begin in a few minutes. Apologies, I think the system is down for the digital nameplate. So on the very first row, we all have our panelists. So on the second row, anybody can sit and join. But like I said, feel free to engage, be up front. This is an engaging discussion. Thank you. All right, I think it's now time to start. I think we've waited long enough, don't you think? In the essence of time, let's move on. As I'm reminding you over and over again, please come sit up front. We won't bite. It's actually a very engaging conversation that we're having right here. So please join us up front and engage in the panels that we're going to have next. We have exciting presentations as well. So with that, we will move on to the session 3. So this is where the conversation gets very practical, because at the center of everything we have discussed today is one key challenge. That is, how do we unlock significantly more capital and ensure it actually delivers impact where it's needed most? So this session focuses on blended finance and emerging innovative instruments. So from risk-sharing mechanisms that can crowd in private investments to sovereign-level tools like debt swaps that can open up new fiscal space for development and climate action. These are not just concepts, they are real, evolving solutions that are already being used and have the potential to scale much further. So this is a chance to really explore what's working, what's not, and what's needed to happen next. We'll start with presentations and then move into a panel discussion with voices from across the ecosystem. To lead us through all this, it is my pleasure to hand over to our moderator, Dr. Jean-Marc Kilolo. Jean, you now have the floor.
Merci beaucoup. Bon après-midi à tous. I see some people are looking at me as if I come from Mars. So how many can understand French? Shall I go in Chinese? So just to create a bit of diversity. So I'm very pleased to moderate this session. So this morning, actually, I attended a session on domestic resource mobilization. We are all aware that AIDS, concessional funding, is shrinking. And we need to come with innovative solutions. And we do believe that Africa is well endowed with resources, but we have to find ways to harness those. So the program goes like this. I will invite Ms. Ngone Diop, Director of ECA, Sub-Regional Office of West Africa, for opening remarks. Before I call my very good friend, Akiv, who's a pro when it comes to blended finance, to present on blended finance and risk-sharing structures to crowd in capital in Africa. Afterwards, I'll call for Ms. Laura Kelly, who will intervene virtually. She's director at International Institute for Environment and Development. Her presentation will be on debt swaps and sovereign-level innovative financing for development and climate action. And finally, my colleague from the office, ECA office, sub-regional office for West Africa, will share ECA experience programs when it comes to debt swap. Ms. Ngone Diop, the floor is yours.
Bonjour, je pense que je vais parler français aussi. Si je ne parle pas français, je vais quand même mettre des mots français là-dedans ou à la fin, parce que nous avons des participants de haut niveau qui parlent français, qui ne comprennent pas l'anglais, et je me dois de m'assurer qu'ils comprennent. Donc, on va essayer de faire les deux. Merci beaucoup, cet après-midi va être très riche. The session, as my colleague said, is blended finance, an emerging innovative instrument. And I'm so happy you all are here since this morning. And all of you, we have, in a way or another, interact in different ways. So senior government official, distinguished representative of the private sector, development partners, ladies and gentlemen, all protocol duly observed. It is a great pleasure to welcome you to the session 3, this one, of the Private Sector Forum on the theme, Blended Finance and Emerging Innovative Instrument. Allow me to first thank the government representative Some of them are present here, but most of them are online. I would like, on behalf of ECA, on behalf of His Excellency Clever Getete, to thank them very much for their trust in ECA. We have been working with them on financing, on harnessing innovative finance, domestic resource mobilization, and so on. All of which was possible because they trust us and they trust our partner. Appreciation also goes to our partner, namely Convergence Blending Finance, the International Institute for Environment and Development, IID, our good partner who is online and friend, Laura, UNDP, the United Nations Global Compact for their close collaboration with the Economic Commission for Africa. This demonstrates our collective commitment to providing integrated support to our countries in such challenging development contexts. Indeed, with fewer than 5 years until 2030, Africa's development ambitions face mounting pressures, rising debt vulnerabilities, with debt to GDP ratio estimated in average at 60% in 2025. But there are cross-country variations. 6 countries have crossed the 100% threshold. Over 10 countries are in the between 60-90 debt to GDP ratio group. From a development policy perspective, the debt distress translates into shrinking fiscal space, an important trade-off, with up to 30% or even more in some countries of government spending devoted to debt services, and consequently, less available for social services. This represents a significant economic and development vicious paradox, which I will call a significant economic and development vicious paradox that must be addressed by us, all of us together, and now. Furthermore, the macroeconomic and social spillover effect of the ongoing conflict in the Middle East, including in Iran, are likely to further weaken Africa's economic landscape, given that the region accounts for about 15.8% of Africa's imports and 10.9% of its export, making it a significant trade partner. ECA, the African Union, the African Development Bank, UNDP Regional Bureau have jointly undertaken a comprehensive study on the impact of the conflict on Africa, along with strategic policy recommendations, which I would like to encourage you to consult for further insight. Our office also has undertaken a specific study focusing on West Africa and the Sahel. All the knowledge products are available. Distinguished participants, the above combination of structural and emerging challenges set against profound geostrategic and geopolitical shift offers opportunities for innovative solutions that strengthen the voice and agency of all countries, regardless of their geopolitics position or geographic reach. Those innovative solutions, which are not quick fixes, are precisely the focus of this session on blended finance and innovative instrument. Both instruments can restore fiscal space while aligning debt sustainability with long-term development and climate objectives. The session, therefore, strategic objectives, are twofold. First, it is to deep dive into concrete measures to unlock financing for development through blended finance and emerging innovative instruments. It is an opportunity to move beyond isolated initiatives to connect those instruments within a broader financial architecture. We aim to collectively move from opportunity to ideas to concrete measures that would lead to impact, linking standardized blended finance model with sovereign debt solution. Second, it is to scale up implementation and accountability, bringing together government, investor, financial institution, National Development Bank, pension fund, business leaders, and so on and so forth, focusing on practical action that must be advanced to move from dialogue, we said this morning, conversation, engagement, to delivering impactful measures. We therefore expect 3 strategic outcomes from this very session. Number 1 is a greater understanding of financial tool and institutional arrangement for implementing blended finance and debt swap instrument as innovative financing mechanism. We would like also, by the end of this session, to really come up with practical steps to be implemented in the short term. We said over 12 months, not more, not less, to scale up implementation and result. Last, concrete input to the AFRSD partnership and financing agenda, including the SDG Impact Lab and post-forum follow-up. We are all in this together for impact. I have no doubt that today's discussion will help us to move forward quickly, but will also help us to continue deep diving, monitoring, supporting countries, not only to manage the debt, but to come up with, let's say, lasting result. ECA, UNDP, the United Nations Global Compact reiterate their collective commitment to continue supporting our countries. And we are very, very confident that very soon we'll be able to have not only quick wins, no quick fix, but we'll be able to have some measurable change, steady change that we can build on, moving on, and really address not only structural challenges, but many, many emerging challenges our country are facing, all of which will be led by our countries. We will be contributing, we'll be doing the right things under their leadership. I know we can count on you, our very, very strategic partner of every day, to actually achieve such bold expectation. I thank you for your attention.
Merci beaucoup, Madame la Directrice, pour votre mot introductif. Se dégage de votre mot introductif au moins 3 idées. La première, c'est que we have a shrinking fiscal space, notably due to high debt ratios, as you brilliantly explained. Conflicts are also fueling that state of affairs. There is a need of broadening our financial architecture. That's why blended finance is welcome as an alternative solution. And finally, partnership. This morning, I was attending and presenting on partnership. Nobody can achieve it alone. Countries need to partner with MDBs, with the private sector, philanthropies, and so on and so forth. So now I invite my good friend Akiv to convince us about the virtue of blended finance to unlock our crowding capital market in Africa. Akiv, you have 20 minutes.
Thank you. Thank you, John Mark. Can all of you hear me clearly? Good. Since this is a post-lunch session, I want to see how many of you are awake. What is the SDG funding gap in Africa? Sorry? 1.3 trillion. You studied correctly. It is 1.3 trillion. The questions get slightly harder, okay? The next question is, what is the total amount of private capital in the private markets, not public markets, private capital in the world, venture capital, private debt, private equity, this total quantum of money that we're looking to mobilize? What is that total quantum of money? The total quantum of private assets in the world? Any guesses? So I told you the questions get harder. So somewhere between $22 to $24 trillion. The SDG funding gap in Africa, 1.2 trillion. Total quantum of private capital, $22 to $24 trillion. In Africa, the total assets under management of all the pension funds in Africa, how much is that? $2 trillion? I just checked before I came up. It was around 1.2 as well, depending on how you calculate it, 1 to 1.2. So my submission is, we don't suffer from a lack of capital. It exists. I just told you the numbers. We don't suffer from a lack of capital in Africa. It exists here in Africa. We just said roughly 1 trillion. It's the total AUM of pension funds in Africa. What we suffer from, and what we need to think about, is how do we mobilize that private capital that's sitting on the sidelines, that is not invested in SDG-aligned projects, infrastructure projects, agriculture projects, renewable energy transactions, SME transactions for gender finance. How do we get all of that private capital into these projects, into these geographies, and into these countries that we all care about? And that's what I'm here to talk about. Now, you've heard this morning the use of the word blended finance, and I've heard it being used in many different ways this morning. So John Mark also told me when you're up here, you have to demystify and unpack this term. So maybe can we get the first slide up, please? So what is blended finance? Blended finance is nothing more or nothing less than a financial structuring approach. It is the use of development funding from the likes of, it could be the Gates Foundation, it could be the Rockefeller Foundation, it could be the government of Ethiopia, it could be Agence France Développement, AFD. So it's the use of development funding from public and or philanthropic sources to mobilize the private capital that I was talking about, on market terms, on market rates, into various different geographies or various different projects. How does this differ from public-private partnerships, you might be thinking? PPPs are nothing more, nothing less than a contracting approach. It's a contract between two entities. You have to look at the contract to determine if there's concessionality embedded within the contract. So PPPs are a contracting approach, may or may not be blended. You've heard of the term impact investing. Impact investing is me saying I'm going to invest with intentionality to achieve impact. And I may or may not trade off financial returns in order to achieve that impact. I might say I want market-based returns, I'm seeking alpha. I might say I'm okay with accepting below market returns if I achieve a higher order of impact. So blended finance is a financial structuring approach, impact investing is an investment approach, and PPPs are a contracting approach. Hopefully that's clarified at least some of these terms that sometimes are used interchangeably. Next slide, please. Now, if you think about, can we go to the next slide, please? So if you think about funding as a continuum, you've got aid and philanthropy on one end, you've got purely commercial investment on the other end, and you've got impact investors sitting somewhere in the middle. All of these actors have different return expectations, different risk appetites, different liquidity requirements. And all we're trying to do with blended finance is we're bringing all of these actors into one transaction where each of them takes a risk-return profile that's acceptable to them. We are not asking the Central Bank of Oromia, a commercial investor, to suddenly become aid and philanthropy. We're not asking Global Affairs Canada or UNDP to suddenly become a commercial investor. All of these parties in a transaction take on a risk-return profile that's acceptable to them. They are in a transaction to achieve something. Some are there to achieve impact, some are there to achieve financial returns, and the impact investors are there to achieve a blend of something in the middle. So that's what we're looking to do with blended finance. Next slide, please. Now you can think about blended finance as two things, as a point in time or something that happens across time. I could bring different forms of capital and blend it within the capital structure of one specific company. I could blend it within the capital structure of one specific project. I could blend it within the capital structure of a fund or of a fund of funds. So you could have a fund of funds that's blended. They in turn blend at the fund level, and the fund in turn blends at the company or project level. So that's an example of blending at a specific point in time. Next slide, please. But you can also think about blending as something that happens across a time horizon. And that's actually not on the screen, but it's something that happens across a time horizon. Let's imagine you are an independent power project. If you're an independent power project, where does the risk of a power project lie? At the early stage of a life cycle, you need to identify the site. You need to figure out the construction costs. You need to sign a power purchase agreement. There's a lot of stuff that happens before you actually sell to the grid and before you actually have cash flows. And so a lot of the risk of an independent power project lies at an early stage of its life cycle. So that's where most of the concessional money is required. And as you move down that life cycle, that's when you can ramp off some of the concessional money and on-ramp some of the commercial money. So it can happen across time as well. Now, ultimately, investors, all of that private capital we're talking about, they care about two things, risk and return. That's the paradigm along which investors make capital allocation decisions. It is that simple. You will take on more risk, but you say, if I want to take on more risk, I want to be compensated for the given level of risk. So it's not about the risk, it's about compensating me for the given level of risk. And so what we try to do with blended finance is we either try to shift risks to those who are able to accept it, we try to reduce risks, so that's on the risk side of the equation, or we try to manage returns or enhance returns. That's ultimately what we're trying to do. We're trying to alter the risk-return ratio for the pension fund, that private equity institution, that impact investor, that bank that's sitting on the sidelines and saying, agriculture, smallholder farmers, too risky for me. Central African Republic, too risky for me. Climate adaptation, I don't even understand what that is. So that's what we're trying to do with blended finance. We're trying to alter the risk-return ratio through different methodologies. And some of them are on the screen. We can use credit enhancements like guarantees to change the perception of risk of a specific transaction, and we've got Ojeru here from InfraCredit Nigeria, she'll talk more about that. You can provide insurance against a range of different risks. You can place capital or blend capital within the capital structure through subordination, saying, you know what, if there are defaults across a specific fund or a deal or a project, I will be the first ones in line to take on that risk. And only then will others bear the risks of that specific project. Or on the equity side, you can say, I'll be an equity investor in this transaction, but I will cap my returns. And anything over above a certain threshold can accumulate to the private sector. Or you can use technical assistance to reduce the overall reality of risk of a project. And many of you from UNDP here, you have technical assistance as one of the tools in your toolkit. On the managing return side, you can top up returns. You can say, you know what, if a bank's going to give you a loan at 15%, and if you hit certain impact metrics, me as a foundation, I will come in and I will say, okay, the bank can make 15%, but you only pay back 11%. Here's a 4% subsidy. Because I want you, as a foundation, to achieve development impact. So there's different ways of calibrating the risk-return side of things. Next slide, please. And here's a little bit of here's a little bit of a longer list. So I said, you could do viability gap funding, IRR caps, minimum revenue guarantees. How many of you in the room got a COVID shot? You've forgotten about COVID, a long time ago. Right? What was essentially governments doing with COVID and with vaccine production? They were saying if you, Pfizer, BioNTech, Moderna, and so on and so forth, if you're going to produce vaccines, We're going to be the off-taker for those vaccines. We're going to provide a guarantee off-take. So that incentivizes those organizations to invest in the manufacturing capacity, the R&D and so on that was needed to do what was needed to be done. So there's a range of different tools that you have. Now, before any of you come and ask me, which tool do I use? Ask yourself, what risk am I looking to work with? Am I looking to mitigate FX risk? Am I looking to mitigate credit risk? Am I looking to mitigate political risk? What risk am I looking to solve for? And then look in the toolbox and then choose the instrument that works for you. Next slide, please. Maybe the next one, because we're running out of time. Maybe the next one after this as well. Yes, one example from the country that I live in, the Development Bank of Rwanda. Please don't forget, by the way, UNDP, UNCDA, whichever agency you represent over here, every country that you live in has a development bank. They're really underappreciated, underloved, and they're a great source of origination capacity and arranging capacity. So what did the Development Bank of Rwanda do? They said, you know what? Traditionally, we depend on the government of Rwanda to finance our activities, the Ministry of Finance. We need to diversify our sources of revenue, so to speak. So they said, okay, you went to a World Bank and they said, can you, World Bank, give the government of Rwanda a line of credit? The government of Rwanda got the line of credit. They gave that to the Development Bank of Rwanda. The Development Bank of Rwanda walked over to the Central Bank of Rwanda, put it into an escrow account. And then they said, we're going to issue a sustainability-linked bond on the Kigali Stock Exchange, and we're going to invite submissions on the sustainability-linked bond. So investors from across the region bid for the bond, applied for the bond, invested in the bond. And the Development Bank of Rwanda said, for some commercial investors in this transaction, if there are losses, if we default on the bond, that cash collateral that's sitting now with the National Bank of Rwanda, that will make you whole. So that gave a certain level of comfort to those investors that they wouldn't have had otherwise. What does that do for the Development Bank of Rwanda? Number one, it diversifies their sources of revenue. Number two, it also drives down the cost of their financing. So what are they then able to do in return? They're able to then pass on that cost of financing to the various SMEs and companies that they work with. So this is one way in which the World Bank partnered with BRD to blend, to drive down the cost of pricing, and to really do something really unique and innovative. And this was the first sustainability-linked bond issued by any DFI, I think, around the world, not just in Africa. So lots of interesting innovation in Rwanda. Next slide, please. Another example, this is from Kenya. There is an organization called Cross Boundary Energy. They said, you know what? We want to see more commercial and industrial solar transactions reaching financial close, driving down the cost of capital for those transactions. We are going to blend at the fund level. So when USAID was around in those days, they got in some junior equity from USAID. They also put in some of their own equity. They also brought other private investors into the transaction. And then they said, we are going to invest across very many different special purpose vehicles, many different SPVs. And each of those SPVs then raise debt separately at an SPV level. And now you have a blended cost of capital at an SPV level that's lower than if you had to finance them individually. And then in turn, each of those SPVs supported a range of different C&I projects across Kenya and now across the region as well. Again, driving down the cost of pricing. 5 years ago, they paid back the US Treasury and actually made a return on investment for the US taxpayer. Look it up if you don't believe me. Quite a very, very unique transaction, and something that we need to see more of, because everybody has said, you know, ODA is declining. ODA was around $178 billion last year. Only a small percentage of that flows to Africa, and only a very small subset of that is used to mobilize private capital. So could we use it more intentionally to do things like this so that we can bring in that private capital that's sitting on the sideline? Next slide, please. Before I leave you, just some thoughts from some of the work that I'm doing here in Africa. Number one is, let's stop complaining about the UK government has no official development assistance, or Sweden has no official development assistance, or the Netherlands has no official development assistance. Why are we waiting for other people to come and solve our problems here in Africa? I know we've got debt distress, if you want to call it that, across balance sheets in our own individual countries. But you've seen examples of countries here in Africa, Nigeria, Ghana, Rwanda, and others saying, we're not going to wait for anyone. We're going to use our own precious balance sheet resources to mobilize and to blend capital and to de-risk those investors that are sitting on the sidelines that I was mentioning. Ghana is doing it through the Ghanaian Infrastructure Investment Fund. Nigeria is doing it through the National Agricultural Development Fund. In Rwanda, the Rwanda Green Fund is doing it. There are examples. In Senegal, you have FONSIS. There are examples of institutions in these countries. So why can't we do this in Tanzania if they're doing it in Rwanda? Why can't you do it in the Gambia if they're doing it in Nigeria? So let's use our own resources in a creative way, number one. Number two is MDBs and DFIs are being pressed to optimize their balance sheet. And we've got regional DFIs here in Africa. We've got BOAD in West Africa, TDB, DBSA, East African Development Bank, Badea, others and so on. How can we use the capacity that they have and the balance sheet that they have to essentially what we're calling originate to distribute? Let them originate transactions. Let them distribute those transactions to the private sector. And the private sector is actually very happy coming in alongside these MDBs because they look at the MDBs and say, you've got preferred creditor status. You are, in some senses, AAA rated or AA minus rated and so on and so forth. Let me work with you to be exposed to an asset class I would not have got exposed to otherwise. So a lot of creativity can happen at the MDB DFI level, and we've seen, again, examples of this. We don't have to sit in a room and figure out what these examples are. They exist. Number three is, as I mentioned, all that private capital that's sitting here in pension funds. How do we get those pension funds to invest? And again, not to come back to Rwanda, but the Rwanda Social Security Board is a leader in that. They invest in venture capital transactions. They invest in private debt. You can change the rules all you want, and we've changed the rules in Nigeria for pension investment. But unless you have someone like Ojeru who's saying, you know what, InfraCredit Nigeria, we're going to guarantee bond issuances, we're going to guarantee certain deals to get pension money off the sidelines, they ain't going to move. You can change the rules all you like. So you can do reforms, but you have to do other things as well. And the last piece is around, let's not just think about SME financing and renewable energy and some of the more traditional sectors, but there's also innovation in the blue economy with some of the debt furniture swaps that you guys are working on, and in carbon finance and in adaptation finance, and we've got lots to do over here in Africa in that vein. So I'll stop here. I think I've overstayed my welcome. But hopefully that's given you a sense of what we can do in Africa, what we are doing, and the lessons exist. We just need to share that amongst each other. Thank you very much.
Merci beaucoup, Akiv. A quick question for you. How many knew about blended finance before young Akiv? All of us? Few of us? All right. So, whose knowledge has been strengthened after listening to Akiv? Akiv, congratulations. So, let me now invite Miss Laura Kelly, who will join virtually. So, Akiv has done an outstanding job on explaining blended finance and has given also some of the tools to de-risk, guarantees, insurance, first loss, strange, subsidy, etc. So one other instrument that's becoming also popular is debt swaps. So Miss Laura, I hope that she's online. Please, you have 10 minutes before the Francophone. Yes, so Ms. Ngone will translate to level the playing field for the Francophone so that they get also a sense, a flavor of what's going on.
Merci beaucoup. Vraiment désolé pour cher officiel, Excellence, je sais que vous êtes en ligne. Nous sommes profondément désolés. Il y a eu une petite erreur de dernière minute, indépendant de notre gré, qui a fait que nous n'avons pas pu vous accorder la traduction. Nous en sommes très, très désolés. Vous avez entendu cette première session, et puis la deuxième session sur le déploiement, c'est un tout cohérent. Comme vous le savez, le travail que nous faisons ensemble vise à répondre à l'impératif de la mobilisation de ressources d'une manière qui n'ait pas un impact sur le taux de risking, etc. Ce que notre cher ami vient d'expliquer participe de cet impératif-là. Ça permet au pays de mobiliser les ressources en pouvant toucher, essayer de vraiment prendre tous les moyens possibles au niveau des pensions, au niveau du secteur privé, faire le blending comme on l'appelle, je ne sais plus ce mot en français, pour pouvoir non seulement permettre à l'État d'accéder à ces ressources, parce qu'on sait que maintenant, l'accès aux ressources concessionnelles n'est plus possible, mais on peut leur permettre de réduire ces risques et de mobiliser les ressources dont il s'agit. Nous allons passer à une autre composante qui est tout au moins très importante également, c'est-à-dire le debt swap que vous connaissez parce que nous travaillons avec vous également sur ça. Nous aurons voulu que votre participation et votre intervention soient immédiatement traduites en anglais. Qu'à cela ne tienne, nous allons essayer autant que faire se peut de les résumer. Et c'est vraiment cette fois-ci qu'on n'a pas eu cette possibilité. Tout l'objectif, c'est qu'on puisse parler de qu'est-ce que c'est que le debt swap, à la lumière de ce qui est le blending finance et qu'est-ce que nos pays sont en train de faire pour autant que faire se peut, mobiliser des ressources de manière qui leur permet de s'asseoir sur la table, discuter avec les créditeurs, s'accorder avec eux pour pouvoir transformer une bonne partie des dettes dépendant de la structure de transformation qu'on aura acquise, qu'on aura discuté avec eux et tombé d'accord pour que ce montant ou tout un montant ou une grande partie soit transformé en un fonds pour le climat ou en un fonds pour le développement social. Nous avons été très inspirés par le travail, un success story au Cap-Vert, et notre collègue va en parler. Nous en avons parlé avec vous tous, ministres hauts officiels, dans le cadre de ce même truc, où le Cap-Vert a pu bénéficier de 153 millions d'euros du Portugal dans un fonds qui est vraiment spécifique pour le climat. Laura est avec nous, notre ICAC également avec nous, avec vous, mais sous votre leadership. Désolé encore le fait qu'il n'y ait pas de traduction simultanée en anglais, mais nous sommes là pour faire le résumé. Merci.
Good afternoon, bon après-midi to. Can you all hear me? I think you can. Okay, thank you very much for the kind invitation to join this session this afternoon. Really interesting to hear that presentation on blended finance. I'm going to talk specifically about one of the tools that can be used to help leverage finance and to blend finance. So hopefully my presentation is available. It is in English, but we have a version in French that we can share with you after the session. So if I could have just skip straight to the second slide, please. This looks like it is a slightly older presentation, so if we could go straight to the third slide. So we've heard about the context already, which is the increasing level of debt service repayments, constraining investment in social sectors and constraining the ability to address climate and nature emergencies. So the changing climate conditions leading to flooding, to droughts, to increased food production costs, heat stress affecting workers, and loss of biodiversity. Most climate finance is still coming as loans rather than grants, so that's actually also adding to the debt challenges. The G20 have recognized this, but their response has been relatively slow so far. The Common Framework and the Debt Service Support Initiative have helped only about a handful of countries, including Ghana and West Africa, Zambia, and Ethiopia is also under discussion, as well as Chad. But clearly this instrument is not really working. Next slide, please. So what are the different instruments that we have at hand? The debt swaps, where old debt is swapped for increased fiscal space because of savings in debt interest, and then the capital that can be swapped for investments in development outcomes and in nature and climate. We've just heard about the sustainability-linked bonds, which can create new resources, but again, we've got to recognise the importance of the risk trade-offs here, and that potentially new bonds can create new debt, and that is problematic. And that's something that needs to be looked at in the round. However, we at IID have developed some analysis looking at some of the countries that are most at risk of debt distress across the continent, and from the 2024-25 debt figures, we calculated that around about $100 billion of additional leverage of finance could be leveraged through swaps. I'm going to talk a little bit more about the detail of these swaps and the approach that we've developed based on the Cabo Verde example that Madame Diop just spoke of. Next slide, please. So the programmatic swap that we've worked on at IID with partners puts the creditors in the picture as one of the key actors. Here we have a much wider range of creditors now. We have the former Paris Club members, countries in Europe. We have China as a bilateral donor. We also have the multilateral development banks, the African Development Bank, the World Bank, also increasingly private sector. So it's a very different group of creditors than perhaps 10, 15 years ago when the highly indebted poor countries initiative to relieve countries of debt was created. But there are incentives for these actors to get involved. Many countries have commitments on climate and nature as part of their own national development priorities and national economic development priorities. And the private sector, though less keen on environment and climate issues, are still thinking about those as important parts of their investment decisions, particularly where they are investing in highly climate vulnerable areas. National ownership is a really key aspect of the approach, and it's aligning the outcome indicators for a swap with governments' own national development plans and developing key performance indicators that are tied to national policy commitments. And also that compared to previous models, financial flows go through government systems. Many of the debt for nature swaps that were done historically, Barbados swap, the Seychelles, independent trust funds were set up outside of government, so that did very little to build government's capacity to undertake effective debt management. Next slide, please. This approach has been gaining interest and support from the International Monetary Fund and the World Bank. This is from a report they produced around about 18 months ago, which looks at the approach of trying to make things simpler to reduce transaction costs and actually to reduce the scale. I think we'll see that some of the swaps that have been historically around about $50 million, we're now looking at swaps that are much closer to $200 billion, such as the swap that Madame Diop mentioned in Cabo Verde. Next slide, please. So this is a schematic diagram of the approach that we have developed at IID. This is as I said, this was an earlier version of the presentation, so there is a slightly updated version of this. But you can see that the approach starts with creditors, engagement with them to look at where debt is unsustainable and where there is the potential to do a swap. Then looking to identify what are the national development priorities around which a swap could be based. And this is quite key because this tries to put national priorities at the very centre of the swap, and that helps to build national ownership, builds national capacity, also helps to ensure that resources can meet local priorities as well. An important part of this, particularly for the private sector, is the sort of the monitoring which links to accountability. So private banks or bondholders that may engage in a swap, if they are agreeing to sign up to a key performance indicator, say around education, they're going to want to see that that's achieved. So monitoring is an important part of this model, and it does also support accountability to the public, to country citizens. Next slide, please. At IID, we've developed a program based on our work with Cabo Verde around how a programmatic swap could take place. This centres on working with ministries of finance and debt management offices to create an interministerial mechanism to engage across different departments to agree national policy objectives. So this is something that has a broad-based policy approach. We recognise that capacity building and support is needed, and it's very welcome to see that the World Bank have now set up a debt swap support hub that was created following the Financing for Development conference in Spain last year, and the Spanish are supporting that. That's a good source of resources. The debt analysis that needs to be done to identify what kind of transaction is needed. Is it a straight swap? Is it issuance of new sustainability-linked bonds? And then identification of the key performance indicators around climate, nature, and development. And then the financing aspects of the transaction. We heard about the bond issuance by the Rwandan Central Bank, Development Bank. That's something that the World Bank can support with, but actually also often governments work with their own sovereign debt advisors, so bringing them into this process, because then actually engaging with the creditors, so the national governments, the MDBs and the private investors, also credit rating agencies. Very often a rating agency looks on it as a downgrading or a restructure, but engaging early with the credit agencies to demonstrate that this is using resources in a productive way is an important part of avoiding that kind of downgrade from the rating agencies. And then the final step to actually implement the transaction in practice. Next slide, please. Some recent examples of swaps. We heard about Cabo Verde. You can see the trajectory here from the lower 200 million debt for nature swaps in Barbados and Belize back in sort of the early 2020s, moving to Cote d'Ivoire, who recently completed a 400 million commercial swap supported by the World Bank. That was a debt for education swap, so that's the first of its kind. And in the pipeline, Angola, also working with the World Bank, has a debt for education swap in the pipeline, and a very large 1.4 billion debt swap for health and for later this year. And Kenya is also working with the World Food Programme on an agriculture and food swap. So we're seeing a much higher range of swap values. We're seeing a much wider range of debt for swaps. So bringing in much more development priorities, moving away from the climate and nature focus. So it's a growing space. It's one of the tools that can potentially be used to support countries dealing with debt and sustainability, but also leveraging finance that's really needed, as we've been hearing, for achieving the SDGs. And the final slide is just some resources to further give you knowledge around debt for climate and development and nature swaps. Thank you very much.
Thank you. Vous m'entendez là? Vous m'entendez? Merci. C'est bon? Bonjour, Excellence. Mesdames et messieurs, permettez-moi de commencer en français également pour suivre et pouvoir nous faire également, je veux dire, comprendre par nos officiels qui sont au niveau de l'Afrique de l'Ouest et qui sont présents avec nous. Nous sommes heureux de les compter parmi nous cet après-midi. Et permettez-moi de switcher en anglais pour faire la présentation, et je reste à votre disposition si il y a besoin d'une quelconque translation. Excellencies, senior government officials, distinguished representatives of the private sector, development partners, ladies and gentlemen, thank you very much, Akif, for your insightful presentation. is clearly highlighted the great opportunities and concrete opportunities for the West Africa region, and this is exactly what we are trying to support. In the next, the presentation, please. Fine. Yeah. Let me start with a simple reality where a lot of presenters talked about previously, which is the fiscal space in West Africa. And the fiscal space is tightening fast these last years. Between 2020 and 2025, debt has risen from 36% to nearly 50% of GDP in just 5 years, which is extremely constraining. External debt alone now represents more than a quarter of a GDP. This is not just a microeconomic issue for the region, but it's a development constraint. Today, debt service is competing directly with allocation of resources to health, education, and infrastructures. Turning these challenges into opportunities, this is what we are trying to do in West Africa. The challenge, as we were talking about, the high debt limits investment possibilities, opportunities, but at the same time, debt can be also a part of the solution and the way to convert this debt into domestic investments and to reallocate these resources into the priority sectors. Debt swaps allows countries to convert these liabilities into investments, mainly in climate, people, growth, to build inclusive growth for the region and for the countries in West Africa. So the main support we are trying to provide is not just managing debt, but mainly is to using it strategically. How is at ECA, we are trying to support countries moving from transactions to systems. We are supporting member states from this thorough process, from diagnostics, design, consultation, dialogue, negotiation, until implementation. But the key enabler for this support or this technical assistance we are providing to member states is the country ownership. And we are working closely with member states to build this country ownership, which ensures that these results are not only delivered but sustained at the medium and long term. The success of the whole process and the whole approach depends on 4 elements. The first one is ownership, the second is partnership, the third is availability of data, and the fourth is impact, how we can impact different sectors and people. When these align, all together, debt swaps can become transformational tool, not just financial tool. The experience that ECA already have, and we have this proof of concept in Cabo Verde, where $153 million of debt were converted into climate finance towards climate fund. This delivered both fiscal relief and tangible impact for Cabo Verde. It shows one thing, is that this can work. What is our, the next please, no, next, next, thank you. So what is the ECI program in West Africa is now to scale from this first proof of concept, this in West Africa with Ghana, Senegal, and the Gambia in partnership with IIED. Each country has its own priorities and targets, energy, infrastructure, ecosystems, and what we are trying to do is to support these countries to achieve these priorities especially. The objective is simple, to turn this debt into investment that can improve lives in these different countries. The next step is to scale this first experience with these 3 countries through regional collaboration, partnerships that can help us mobilize more resources and deliver greater impact in the West Africa region. This is how we intend to move from pilots to transformation. Thank you very much for your attention.
Merci beaucoup à Soumaya pour cette excellente présentation. Distingués participants, les hauts cadres des différents pays, y compris les 3 pays qui sont en train de faire le debt swap avec nous. Nous sommes très heureux. Grosso modo, ma collègue a vraiment articulé, mis en exergue votre leadership. Parce que ce programme de debt swap n'aurait jamais vu le jour sans votre leadership probant dès le départ, qui a permis de mettre en œuvre avec l'accord des ministres des Finances, comme elle l'a dit en résumé, de mettre en place des équipes techniques constituées de tous ces secteurs-là, y compris bien sûr le ministère de l'économie et de planification, les statistiques, etc. Mais un élément important aussi, c'est l'inclusion que nous allons continuer à faire de la part des civil society, la société civile, les communautés, parce que c'est éminemment important que les acteurs ne restent pas seulement au niveau national, je veux dire public, mais également intégrer certains groupes qui ont la voix, qui ont la responsabilité d'accompagner ce processus-là. Un autre élément majeur qui a été mis en exergue par ma collègue, c'est effectivement tout ce qui est capacity building, le renforcement des capacités de nos pays, pour que cette durabilité-là soit vraiment une réalité, mais qu'il y ait des pôles d'experts dans ces différents pays qui puissent continuer le travail que vous allez diriger lorsque les résultats seront réalisés. Last but not least, ce qui est important aussi et sur lequel elle a bien voulu appréhender certains éléments, c'est que à charge au pays et le choix du pays de décider de si la dette, la transformation de la dette sera en climat ou aussi en services sociaux. Pour certains pays, c'est l'éducation, l'autre la santé, ce qui montre aussi une certaine autorité du pays, du leadership, pour décider de ce qui est mieux pour le pays, les priorités du pays, eu égard à leur agenda de développement, etc. Donc, grosso modo, je voulais faire ce résumé rapide, mais elle est là, et moi et d'autres collègues, pour donner de plus de détails en français. Merci.
Merci, Madame la Directrice. Avec votre mot en fait clôt la première partie de la session 2. Alors, je vais peut-être inviter la table d'honneur à se lever pour une photo de famille avant que je rende le tablier à Akiv pour le dernier panel sur Aligning Blended Finance and Debt Solution to Scale Investment and Delivery. Picture, please. all the photographers disappear. Have you appreciated the discussions or not?
Thank you very much. Okay, we're going to move to our next panel. I'm going to be the one moderating, but I've got some excellent thought leaders in the room. It's my pleasure to invite Esther Lulsegard, partner Zoscale Ventures. Esther, please. Lamine Trali, Sustainable Finance Lead, the Global Green Growth Initiative, GGGI. Lamine, please. My friend Murtaza Jiwanji, Sustainable Finance Advisor, UNDP Africa Finance Sector Hub. Oju Adeniji, Vice President, Origination and Structuring, InfraCredit Nigeria. I believe we've got two individuals who have joined us virtually. I did see somebody before. Fasaiko Danzo, Principal Financial Risk Analyst from the Debt Management Office, Ministry of Finance, the Republic of Gambia. We also have Alione Douaf, Director of Public Debt Management Department, the Ministry of Finance, the Republic of Senegal. Please.
Okay, let's get underway. I'm going to ask all of you here at least to quickly introduce yourselves and your organizations in 45 seconds or less. Ojeru.
Thank you, Keith. And it's a pleasure to be here this afternoon. I hope you can all hear me. Okay, great. So, greetings from Lagos, Nigeria. I work at InfoCredit, Infrastructure Credit Guarantee Company. It's a local currency credit guarantee company in Nigeria, and we're a specialized financial institution, but we've been able to mobilize pension fund in Nigeria to unlock, I would say, financing across infrastructure projects in Nigeria. The story 10 years ago was that we had lots of abandoned projects, uncompleted projects in Nigeria, or projects that never followed through. The pension industry were unable to invest in infrastructure projects. Today, with the impact of InfoCredit, infrastructure is considered as an asset class that allows pension funds put investments in it. Nigeria has a large pension industry of about $21 billion. So that unlocks capital at scale at both, climate finance level and infrastructure finance in general. But my focus today here would solely be on infrastructure finance and what has helped, what has worked in the past at InfoCredit. Thank you.
Thank you, Ojeru. Lamine, 45 seconds or less.
Thank you, Chief. My name is Lamine Trawale. I'm with the Global Green Growth Institute. I'm the Sustainable Finance Lead for Africa. Recently moved to GGGI, previously with UNDP, Sustainable Finance Hub, and right here, sitting close to my former colleague. So today, my focus would be on thematic bond as an innovative instrument to scale in finance for the SDGs and the NDCs, and the role that GGGI plays in this space. Thank you.
Thank you, Lamine. Murtaza.
Thank you. Good afternoon. My name is Murtaza Jiwanji. I work with UNDP, our Sustainable Finance Hub based in Pretoria. I manage our Africa program on 3 lines of work. The first is on integrated national financing frameworks, and we were very pleased actually to be with the Ministry of Finance here in Ethiopia, who launched their sustainable finance framework on Friday, a few days ago. The second area of work I'm responsible for is we have a program on public finance, looking at fiscal policy coherence. And finally, and perhaps most excitingly to this conversation today, is we manage a portfolio of work looking at attracting private finance, pipeline building, investor brokering. It's a real pleasure to be here, and also nice to be back with you, Lamin. Thank you.
Thank you, Murtaza. Esete?
How about now? Great. Okay, so I'll repeat. እንዴት ዋላችሁ? Good afternoon. So I'm Seitalul Seged. I'm a partner at Zoskalis Partners, a private equity firm investing in East Africa. But primarily, much of our investments are done in Ethiopia. We're focused on SME growth funds, on our Fund 1, and we're currently trying to raise our continuation fund or our second fund on decarbonization projects. So we have about 6 investments in total between Kenya and Ethiopia, and we're much focused on healthcare and manufacturing companies. Thank you.
Thank you very much. And we've got a couple of folks online, as I mentioned. Fasaiko, do you want to introduce yourself if you're with us?
Yes, good afternoon. I don't know if you can hear me.
Yeah, we can hear you. Go ahead, please.
Yes, I'm Fasiko Danso. I work for the Ministry of Finance and Economic Affairs, the Gambia, at the Debt Management Office. So it's a great pleasure to be here. Thank you.
Thank you. And Mr. Alione from the Republic of Senegal, are you with us? If you are, please introduce yourself. Are you with us? I don't think so. Okay, no worries. Esete, maybe we'll come to you first, because you are the only one on this panel that's really representing the private sector. Ojiro, I know you are sort of quasi, but Ojiro actually has money to place. She's that part of that $22 trillion that I was talking about. If memory serves me correct, the Zoscale's first fund, which you just alluded to, was blended to some degree. Why was a blended approach needed? Could this have not been done on a purely commercial basis? And what have you learned from Fund 1 that you're bringing into the new decarbonization fund that you're building?
So thank you, Aki, for...
Speak into the microphone, we told you.
Right, yeah. Can you hear me? Yeah, is it good? Okay, great. So thanks, Aki, for this question. In fact, while I was sitting there and hearing your presentation, I just wished this happened in 2016, when we actually raised our first fund. Well, in a pure sense, it's not, the Fund 1 is not really a blended as such, you know, the way that Aki kind of described it, but there are some component of blended finance in a sense that we have, of course, a blend of investors or a class of investors. We have the DFIs and the private investors that have invested in our funds. And then we have the technical assistance that is very helpful for capacity building for our SME companies that we have invested. But for the most part, the returns and other aspects, the risk-adjusted returns, were purely, primarily on commercial terms. You know, the commercial model is similar to all investor groups. So to your second question, why was it necessary? I guess initially, of course, like I said, it's done purely on commercial basis. But then after some time, you know, fast forward, the risks that we have seen over the last 4 or 5 years have not been really factored into our model initially. So let me put a bit of context. When we did our first fundraise, this was the time where Africa was rising, everything is so beautiful and rosy. And fast forward, right after COVID, we had all the global shocks and as well as the local shocks that we have had, particularly in Ethiopia. So given those lessons, on our second fund, which is the decarbonization fund, there were some key lessons that came out. So the first key lesson was around the thematic nature of our second fund investment. So we were very clear that we needed to go into a sustainable, we were still trying to achieve, job creations and other impact investment measures, but we needed to be quite unique and niche in our approach on our second fund. So the thematic aspect was very critical for us. And also it was a learning from some of the success stories of our Fund 1, some of the investments that really had good returns, because we did see that our investments that have large offtake agreements did well compared to the B2Cs. So the B2B kind of engagement, it was easier to pass on, for example, the FX rate. So just to put context, in 2018, when we were buying companies, the dollar to the ETB was trading at 30, and fast forward, now it's 6 times. That was nowhere in our model, even in the worst case scenario. So hence, but even with that, the successful companies, we start to see, okay, what can we do to grow these companies further and to scale them up, just not in Ethiopia, but also in Africa beyond Ethiopia. And hence the thematic nature, and then the blended finance concept, or the blended finance, became very, very necessary to our second fund. So we have multiple tiers, we have the first loss as we pitch it, we have de-risking mechanisms and other types of instruments that we have introduced. So it's still an early stage, but these was really a helpful lesson from our first fund. Yeah.
Great, and I would also mention that the technical assistance for the first fund is blended, because if you didn't have technical assistance, you wouldn't be able to strengthen the businesses. And if they weren't strengthened and didn't have the capacity, you wouldn't see the returns that the investors saw. And you also benefited from a design grant, if I recall.
Yeah, exactly. So, yeah,
good,
that's absolutely correct. The technical assistance was very helpful in our first fund, yeah. Thank you.
Ojoro, if I may come to you, a question for you. How does InfraCredit's model provide comfort to the Nigerian pension funds that we all mentioned are sitting on the sidelines looking at this as an asset class, but really not moving money into renewable energy or infrastructure? And also, now that you worked with these pension funds for a reasonable period of time, are you seeing them graduate away also from needing a local currency guarantee? Because they're more comfortable now than they were otherwise.
Okay. Interesting questions. So, is this better now? Okay. Very interesting. Over the years, we've seen how, I would say, pension funds have evolved in terms of, the exposure on not only in the infrastructure side, but also on the green side, on climate finance side. InfraCredit is a AAA rated entity. So our AAA rating gives pension fund comfort that, 20 years down the line, when I retire, I should have my money saved up to be able to do other things. But then I think what also has shifted, and that has really supported, I would say, the industry in particular, is regulation. Regulation has moved where pension funds are now allowed to invest in green assets. So 10 years ago, pension funds didn't know about investing in infrastructure assets. But InfraCredit has a AAA guarantee, which gives them comfort to invest in infrastructure assets. So that's the first thing. The second thing is regulation has now been updated to allow pension funds invest in green assets. So green assets around renewable energy, right? We do have a huge energy deficit in Nigeria. We have 45% of our population don't have electricity, and I've never seen electricity before. Now, the way we make investments in electricity in Nigeria is very critical to enable, I would say, my brothers and sisters have access to electricity. Now, rather than focusing on upgrading the grid alone, because we know that it costs a lot of money, how about we do distributed renewable energy?
in doing distributed renewable energy allows you improve energy access in the rural communities, off-grid communities, underserved markets, and even unserved areas, communities as well. It empowers not only the community, women, children, they can go to school, they can see electricity. So we've seen how fundamental that has been. Now, in doing distributed renewable energy, it's a low-hanging fruit, it's smaller. I mean, transactions in that sector are small scale. But what that helps us do is we're able to take power to places that didn't have power. Now, the pension industry regulation allows them invest in instruments that are guaranteed by InfraCredit, but are providing distributed renewable energy. So in the past, you never would find a pension firm investing in DRE, but they now invest in DRE, they invest in mini-grid across the country. So I'll say that has been successful. What gives them comfort is not only our credit rating or the guarantee InfraCredit provides, but it's the fact that there's a lot of project preparation, project support, project governance that goes into these transactions. How a project is structured is so important. So my brother from Uganda was talking about project preparation, and I was smiling because it's the foundation of every successful project. A guarantee doesn't make a bad project good. It actually enhances the value of a good project that you know is bankable. So I think that's something that's very fundamental, and the pension industry understands this clearly. Now, when you are preparing projects, you also need to understand what the investor wants to see, while embedding what the financier also needs. What does the financier require? Sometimes we found out that some financiers don't even know what they require, right? So World Bank, KfW, GAP helped with setting up a facility called Distributed Renewable Energy Enhancement Facility. That's a specialized project preparation facility that focuses on investment readiness, project preparation, project development, because we found that a lot of project developers have projects, but they don't have an idea of how to put these projects together. So that's what DRIFT focuses on. Now, when the pension industry finds or realizes that these projects are well prepared, it gives them comfort to invest in it. I'll give you a practical example. So we're moving away from project preparation to actually structuring projects. So InfraCredit guaranteed the very first renewable energy project was the Shiroro Hydro Power Plant in Niger State. Now that power plant was concessioned by the federal government, but the federal government had built it and it was all done dead, and they just thought they couldn't utilize that power plant because in that terrain there are sharks that sort of had destroyed the intake gates of that power plant. Now, in trying to fix it or find the solution, the government concessioned it out and said, okay, these people who have owned this project or who have taken this concession, take it off us and just give us money, without understanding what the key issues are with that project. But when InfraCredit came in, we looked at the project, understood, did a lot of feasibility studies, by the way, which cost money, to understand what the issues are. And we realized it was a happy crocodile that snatched off the intake gate was very crucial to allowing that power plant to run. Came in and then got people, divers to come in, and that was replaced. After that was done, the pension industry was comfortable because it then meant that the power plant can run. Now today, that power plant, that hydro power plant, has capacity to black start the whole of Aso Rock, that is the capital of Nigeria. It didn't exist before, right? When we have power outages, the capital is also significantly affected in the past. But with that investment and that deep understanding, and I'll say deep dive, it gave everyone comfort and good understanding. That particular concessionaire today has issued a bond in the market without InfraCredit's guarantee. So the first instrument they issued was a 10 billion naira bond that was guaranteed by InfraCredit. The second instrument they issued, it wasn't guaranteed by InfraCredit. Why? That's because of the enhancement InfraCredit has brought. Two, because the pension fund industry understood the critical areas that needed improvement, and that investment went in there. Three, they saw how important and strategic that power plant is to the entire country. So evolving from giving guarantees to good projects, but then also good projects being able to access finance, I think has been very instrumental to us. So that's one practical example, I'll say, that has worked for us in InfraCredit.
Great, thank you, Uchiro, and thank Thank you for reminding us also about the value of project preparation facilities. And InfraCredit's AAA rating bears mentioning comes from also the backers of InfraCredit, which tend to be the donor agencies, the private infrastructure development group, composed of Canada, UK, France, so on and so forth, set up InfraCredit along with the African Development Bank. And we're replicating that model now in Ghana. And inshallah soon, Ethiopia is also on the radar at some point. And so anybody who's interested in bringing this to Ethiopia, please engage with Ujira before you leave. Murtaza, if I may come to you. You're here not just to grace us with your presence, but also for the INFF launch that you supported the government of Ethiopia with. There's a lot of conversation in these, there's a lot of buzz in this ecosystem around country platforms, national platforms. Donors want to work with these kind of entities. What is a country platform? And how does blended finance, mobilization of private capital intersect with that country platform?
Thanks very much. And it's great to be on this panel, actually, because just listening to Eseta, I was already keen to swap notes, because I think a lot of solution sets are emerging already in the continent, and this is great that we're here to share and learn. I guess the one that's fresh off the press, as you mentioned, is that the government of Ethiopia, the Ministry of Finance, on Friday, last Friday, launched their Ethiopian Integrated Sustainable Finance Framework. And in there, of course, blended finance is mentioned as an extremely important approach to de-risk and attract further capital to achieve Ethiopia's national development targets. And the reason for that is because in that framework, they recognize that public finance is never going to be enough. But it's not a mathematical equation. It's not a gap that needs to be filled. This is the interesting thing about the strategy, is that what it's proposing is some systemic shifts in the way in which Ethiopia mobilizes financing for its development. And it acknowledges that there is private capital to be accessed not only overseas, but lovely to hear the pension example of Nigeria, that there is actually private capital available in Ethiopia's own economy, thereby reducing reliance on external financing. So blended finance as an approach is one of the approaches that governments like Ethiopia are really investing in to help de-risk. Now, so that's just a bit of background. Now, a number of countries have gone down this route and have launched their own country-led, usually through ministries of finance, financing strategies. But what was really interesting about the launch on Friday is that the government also made a very clear statement that whilst we're launching the framework, we're also creating a mechanism called a country platform. And really it's an investment platform. And the way they're couching it is that it's the kind of investment arm, or in a way the implementation vehicle for the country's finance strategy. So that's what it is conceptually. In practice, it's still early days in Ethiopia, but there are a number of things brewing. We work across quite a few countries that are already trialing this out. The idea behind a country platform, and these are, I would suggest, Akif, that these are also contributing factors to the success of a blended finance approach. I think there's a sort of two-way relationship here. So what a country platform does is that in many countries we work in, and I think the ministry feels the same in Ethiopia, is that there is investor interest, and it's really great to hear your story, and I'd love to find out more later. There is investor interest, there is financing available, even within economies and offshore, but what's holding a lot of these investments, these deals from being made to connect them to development projects, is the viability or the quality of pipeline. And I think, another factor we've come across, it's not just the quality, it's also the very specific parameters. So as you said, for pension funds, it needs to be a very extremely high investment grade because of the investor's needs at the end of the day. You cannot afford a certain level of risk. And there's a whole diversity of investor needs out there. And so what's missing is a kind of interface to bridge or translate the different requirements and interests and needs of investors and the pipeline of development-oriented projects or initiatives and make that connection. So that's essentially the idea behind a country platform. Now, to link it to your presentation, Akif, on blended finance, to me, this is, in a way, a de-risking approach. I mean, it offers, it sort of closes the gap between knowledge. It also offers those that are looking for financing an opportunity to adjust their proposition, to invest more in feasibility studies, to adjust the scope or the ticket size to match the needs of investors and broker a deal. So that's basically what's brewing in Ethiopia and in other countries. Just finally, I think when countries or agencies embark on a sort of blended finance journey, I think it's really important to bear in mind as part of the de-risking is that, well, what is the blended finance approach specifically for? What are the risks and return associated with that? And be really specific, you know, what are the ranges of return and risk profiles? But also critically, therefore, what is the subset of investment opportunity? I think a lot of countries sort of feel like let's start doing the pipeline and then hope we can structure a blended finance deal. But I think it's really important right up front to understand the market first. And that, again, goes back to the country platform, which is something that will facilitate that. Thank you.
Great. Thank you, Murtaza. And also, I think worth mentioning that the country platform is a good interface for donors to engage with. Because oftentimes, if you go to any specific country in Africa, there's so many different donor interventions that are badly managed, badly coordinated. And this gives the government one interface and one offering for donors themselves, who are the ones bringing that concessional money in by and large. Lamin, if I may come to you, GGGI has a global trust fund, last time I checked. And you support country-level partners to issue thematic bonds, some of what we heard about earlier as well. Maybe you can give us a couple of examples of where GGGI work with African countries, sharing us an example of blended finance in action, but also how this opened up a new investment class to investors that who would not have otherwise even thought of investing in something like a thematic bond.
Thank you, Chief. Thanks for that wonderful question. So at Global Green Growth Institute, GGGI, we're currently implementing two main global initiatives. One of them is what you've mentioned, that's the Global Trust Fund. We are as well implementing the Global Green Bond Initiative, EU Global Green Bond Initiative. And in each of these initiatives, what we are doing, we're supporting sovereigns, sub-sovereigns, and the private sector in issuing thematic bond instruments. And by thematic bond, it could be the GSS plus, you may call it, sustainable bonds, green bonds, social bonds, sustainability linked, or even sustainable sukuk. So what we've been doing is we work with especially first-time issuers that have never issued these instruments, and then work with them to provide hand-holding support from capacity building to developing their sustainable bond or green bond frameworks, depending on the instruments they would issue, as well as coordinating them getting a second-party opinion, moving towards to market engagements in the form of roadshows. But even before getting to roadshows, I skip one critical step, and which many have actually alluded to in their deliberations, which is to do with how do we help them build a credible, sustainable asset register, meaning credible pipeline of projects that the funds can finance. And then market engagement, of course, then even after issuance, how do they go about, or how would they go about to report, not just on the allocation of these funds, but the impact these funds would have on the economy. So this is basically what we do. And then, but I'm sure in the building we have a lot of private sector players, but again, I think online we have some government colleagues. So but before advising whatever instrument, or before advising any sovereigns, for example, sub-sovereigns or private sector, but specifically for sovereigns, before we advise what kind of instruments would be ideal for you, We will conduct what we call a due diligence. Of course, we understand your debt situation, your debt sustainability. Colleagues have mentioned that many countries now in Africa, you have a lot that are currently faced with high risk of debt distress. You have some that are already in debt distress. And in that circumstances, perhaps a debt swap may be something ideal, but in instances where you have countries that are currently at moderate risk or low risk, a thematic bond, of course, could be ideal. So we work with them to issue this instrument from the very beginning all the way to the end. So now to give a practical experience, especially in Western Africa, we're working with West African Economic Monetary Policy, WEMU, and then to support mostly first-time issuers to access these capital markets, sustainable capital markets. So through the WEMU arrangements, I would name maybe just one, two. South African Development Bank is one of those that we've worked with currently. We're currently still working with them to issue a sustainability bond. Now, depending on the pipeline that they have both social and then, of course, some environmental. Let's say they wanted to issue a bond instrument to finance affordable housing as well as green buildings. So if you look at these two broad pipelines, you realize a sustainable bond would be the ideal instrument for them. Now, the first step was we develop this sustainable bond framework with them, and then now currently about to get a second-party opinion. So South Africa side, we also worked with some sovereign governments, of course, government of Cote d'Ivoire, government of Benin as well, both looking towards to assessing these thematic bond instruments. But achieve now to link this to link it to blended finance. In many African economies, be it sovereign, sub-sovereigns, or even private sector, investors' perception is something that you cannot just change overnight. And there are, of course, perceived risk. There are actual risk as well. Now, to mitigate, because what we've seen in the market is this. You go to the market as an issuer, you want to raise these funds. Investors are skeptical because of those two things, perceived and even actual risk. Now, what we've seen play a critical role, especially blended finance instruments, you mentioned technical assistance. We've seen it to be a very, very critical role, as well as targeted guarantees, anchor investments as well. Because there are instances you have partners that would come in as anchor investors to make sure, of course, this is successful as well. And then first loss capital is one thing I think you may mention. These are some of the things we've seen, and we think blended finance definitely, for me, it's here not to just, it's not here to replace the market or so, but it's rather here to help build the market, to sort of bring in that confidence that investors need, and to de-risk financing. Since we've said there are no sort of, or no lack of capital. So to conclude, finally, I would say, if we have credible pipelines, we have robust frameworks, and we have smart risk sharing mechanisms, then definitely I believe we should be able to unlock commercial capital at scale, private capital for Africa.
Great, thank you very much, Lamin, for sharing that experience with us. And also, maybe important to mention the role of standardization, because these things are quite bespoke. They take a long time to put together. They take a long time to get to market. If we can standardize and reduce that time period to get this to market and make it a plain vanilla product. You speak to most investors, they want plain vanilla. They don't want too many bells and whistles around them. So that's something to think about for the future. Before we wrap up, one question for our colleague from Gambia, who's sitting patiently online waiting for us. We heard, Fasioko, from UNECA that Gambia is considering a debt for nature swap, was investigating a debt for nature swap to alleviate your foreign debt burden. If you could provide us with an update on that transaction, what has the government learned so far in terms of the process of putting something like this together, and when could we expect to see the transaction close? Maybe any updates on that that would be super helpful. Thank you.
Thank you so much. I think when it comes to the Gambia, we are still in a, I would say, in an early stage for this initiative because this is very new to us. I think around end of March, basically, we received a mission from UNECA and IIED to the Gambia. Basically, I would say this is this was a fact-finding mission to basically see the structure of our debt portfolio as well as some of the institutional arrangement we have in place. So we had a meeting with them in personally or in person in end of March this year. So after the meeting, basically we had shared several data with them. Basically, they promised us they were going to get back to us after the analysis is concluded from their end. So this is basically where we are in terms of this data swap for climate and social development initiative. But like if we come, let's say for the government of the Gambia, our part basically we're trying to ask, basically see if this could basically work towards having our debt service being redirected towards a climate finance project rather than having a debt deferral, because debt deferral basically would not solve the debt sustainability and the sustainability challenges currently we are facing. He's basically trying to push your debt sustainability challenges to a medium term, which basically will eventually come up. So basically, if we can have this arrangement in a form of like a directing or redirecting our debt services to finance some of this climate initiative, this is basically what the government is basically trying to work towards with the UNECA and ED. So part of our strategies, especially going towards medium term, we are currently formulating our debt management strategy. And if we come specifically for the domestic side, we are trying to basically introduce some of these innovative instruments in our portfolio. Let's say maybe from 2027 thereabout. So we are still at this early stage, but because this is very new to us, so we basically would need a support from UNECA, Global Growth Initiative, as well as IIED to work with them so that at least we can have some of these instruments or that in our financing strategy. So since we have currently a directorate basically responsible for climate financing, which basically the government has set up recently, which basically would work with them to implement some of these initiatives. But from our side, at the debt management office, debt swap, as well as introducing some of these innovative instruments, it is still at an early stage for us. So we still need some capacities in terms of implementation of this whole idea. So just to conclude, I would say that so right now we are at the document sharing stage. We have shared a required data with the IIED and UNECA. So after the analysis, basically, they would basically inform us, particularly on our external data structure. From there, we can see the way forward in implementing this initiative. Thank you.
Thank you for sharing that with us, and all the best for getting this transaction over the line. We're looking forward to hearing more about it as things progress. I don't know if we have any time for questions. I think we have time, right? We have time for one question. Anybody who's dying and burning to ask one question to anybody on our panel? You got a question? No? Anybody has a question for anybody on the panel? Going once? Yes, sir.
Thank you so much. Really amazing. I've learned a lot personally. There's something that has been bothering my mind, especially, for example, in Uganda. We have a law that allows an investor 100% profit repatriation. And I'm happy when we talk about pension funds that are locally. That means we retain that value in the country. But looking at the trends that have been happening where we mobilize capital outside the continent. For example, there's a company in Uganda, it does gold mining. I think they invested in $200 million at some point, but now they export up to $1.5 billion. And you must have seen on the news, for the case of Uganda, we export now $6.2 billion of gold, but we are retaining around $200 million. In terms of financing, how are we making sure that, because we are taking the profits, all that outside the continent, how are we tackling and designing this? But I'm happy with the pension funds for starters, but that has been bothering my mind for some time. Thank you. Over to you.
Any of
I think I would tell the approach Akif, when he was out there educating all of us about blended finance, what you're trying to solve for. So on the Nigerian side, InfoCredit was really trying to solve for credit risk and, lowering default levels. So that's the area we came from in setting up a climate finance blended facility where you have 50%, risk sharing from UK FCDO and British International Investment and 50% from InfoCredit. So that's the approach we came from. Because these transactions are small scale, DRE in general is nascent in the Nigerian context, right? But also give pension fund comfort. That first loss was brought in from British International Investment and UK FCDO, right? To help, I would say, lower the cost of capital. So the climate finance blended facility of InfoCredit is set up to do a few things. One is to aggregate capital from domestic capital investors, but also to lower the cost of finance, because we found out that a lot of these developers didn't have access to funding. So I think coming from the angle of what are you really trying to solve for would help. Across Africa, we do have challenges with repatriation of funds, right? But our solution is the money to develop Africa is within Africa, because we do have a lot of funding within Africa. Nigeria's richest man, Dangote, got funds from the local banks in Nigeria. So I believe it's possible that you can solve Africa's problem within Africa. The funds exist rather than relying on, foreign currency. I mean, yes, foreign currency does help, but Africa is a soft currency zone, so we really do struggle sometimes with repatriation of funding. So I think aligning and trying to decide, am I trying to solve for the currency issue or is it credit risk, I think is very important to look at. I don't know if this helps.
Thank you, Jiro. To answer your question specifically, also we have an issue with transfer pricing in Africa. There's a lot of leakage in the system because multinationals repatriate profits and pay taxes on profits in jurisdictions which have a much lower threshold than in others. And so there's a huge issue, and that's a coordination issue from OECD, G77, others. I guess out of the scope of this discussion, but there's definitely that issue, especially in the mining sector. They're very good at moving things around. Not above board, but definitely legal to some degree. Quick point before we wrap up, because we've got to run.
Sure, just to add a few points, because this is typically something that's raised, in local finance, in local context. How do you ensure that money is not leaking? Through the right channels, I think there needs to be investor confidence at the end of the day, right? So we want to bring in capital, and I'm talking about from a foreign capital point of view. So we want to bring in foreign capital, and hence there needs to be some form of assurance that this money is returned back once it's done its purpose, right? So when it comes to repatriation, I think when we accept these kinds of monies, we have to be able to see the entire ecosystem. So if it's a gold mine, for example, for that particular project, what we see with huge investments is that the small SMEs that are actually supplying products or other services for this gold mine will usually they tend to be owned by locals. So you have an entire ecosystem that develops. And we have a case, for example, with Ethiopian Airlines having a large-scale investments a few years back. There was a huge ecosystem that was created locally. So there's a lot of job creations that happen. The local market kind of also improves. And then, once foreign investors are comfortable with money going in and then going out, there's a tendency to revolve that funding as well. So this repatriation of profit, I think, based on market principles, is not a huge worry as long as it's done properly. Of course, the element of transfer pricing and so on, that's another issue. But as long as it's done properly, then I think that actually benefits the investor and the continent as well.
Great, thanks. I think we're at time. So, Ojeru, Namin, Murtaza, Sete, and Faseiko, thank you so much for being here. And thank you to all of you for being a patient and engaged audience. Thank you very much.
Just to see if you all are with me, can we get another round of applause just to bring back the energy? Thank you, dear panelists. So with that, we're going to move to our last session. I know everybody's tired, but this is where you're going to get to see the action plan for the next 12 months. So it's going to be an engaging session. So we will keep it short and concise. So after our panelists leave, we'll move on to session 4. Thank you very much. So it was an insightful discussion. Session 3 was very insightful and it was highly impactful. But now we will move to the next session and we'll continue the conversation by building the key themes we've just heard, particularly around financing solutions and innovative instruments, and move into our final session, which is going to be on leadership compact from financing solutions to 12-month actions. So throughout the day, we have engaged in rich discussions, examining key constraints, exploring financing solutions, and identifying partnerships opportunities. So the next session is intended to take that discussion one step further. This is a focused leadership exchange, and I will encourage us to keep contributions clear, practical, and action-oriented. So the aim is to leave this session with a concise set of priorities and next steps, rather than broad reflection. So with that, I am pleased to be joined by Mr. Murtaza Juwanji, Sustainable Finance Advisor, UNDP Africa, Sustainable Finance Hub, Mr. Prasoon Raghuvanshi, Senior Investment Officer, IFC Ethiopia, Mrs. Janet Kame, UN Women Special Representative to Ethiopia. I all invite you to the stage. Ms. Janet Kame. Okay. Thank you all for joining us. In order to make it short, to keep the pace going, I'm going to be standing while asking you the questions. Thank you very much. So I will begin with a forward-looking question. What is the one priority reform or partnership pathway or investment action that should be advanced first over the next 12 months? I will begin by handing over the first answer to Murtaza Juwanji.
Thanks very much for that million-dollar question. For me, and this is, I'm trying to be impartial here, as we work across about 30 countries in Africa, with ministries of finance, but also with investors, with different sectors, with private sector. There are so many development priorities, but there's one thing that's kind of blocking the unlocking of the full potential of financing for development across the continent. And this is my humble view, but based on that experience, is that bridging, is that uniting of a common vision, and then aligning different requirements and interests within Africa, within countries in Africa, between investors, SMEs, governments. It's just that intermediary function, that brokering function that is missing. Because when you look at it from a bird's eye perspective, there is a lot of interest and demand in investing in development and a lot of financing. One could even argue that there's enough financing within the continent to meet 2063 and SDG targets. But what's missing is that bridge. And that's why I think I was asked about the country platform here in Ethiopia. That is why the Ministry of Finance is really investing in that concept and wants to make it real and practical. Thank you.
Thank you. Prasoon, your perspective on this, please.
Thanks. So I do concur with my fellow panelists and also other panels that in terms of capital, there is capital available.
Yeah.
The challenge is the dearth of bankable projects. And essentially when we say bankable project means putting together different components or different pieces of a project to de-risk and then create a financial structure, that makes sense. And when we say de-risk, it essentially means 4 factors. One is market. Second one is technical. Third one is regulatory and legal. And then fourth one is from the ESG part. And once these projects are de-risked, then it really helps in terms of putting a project structure together that can really make sense for a potential investor. So I would just take a step further here, and I would say in terms of having a more practical step over the next 12 months, as you pointed out, we also have to narrow it down to specific countries and specific sectors, specific value chains that we can target, considering the resources, especially from the bandwidth of the partners as well as time-wise is limited. So which is why it would help to target some of these specific value chains, specific countries, and then focus on how do we de-risk these value chains, how do we de-risk these countries to make a bankable case for a potential private sector investor to come in and invest.
Yeah. So from the general, make it specific. Right. Great. Mrs. Janet, up to you. The next step, the next question, please.
Thank you so much. I think maybe we consulted before coming. For me, really, the key action will be convening all these complementary partners to co-create particular prototypes, what you call maybe bankable projects.
Yeah.
And from where I stand, maybe on women, on youth, or on a particular sector. It could be water, it could be education, it could be something. But this should be co-created by all the partners we have heard to have an example, a concrete example of how blended finance works. From government setting the policy, from investors coming with the money, with partners that will come to de-risk, as my colleague was saying, and then who is implementing. I think this is something that is doable within the next 12 months, and we can do this even in Ethiopia. My colleague Mutaza was talking about the integrated financial framework for Ethiopia, which has a component on gender equality and women's empowerment. I think that is already one of the good ways to go, because it is a platform that will bring private sector, government, banks, and partners on the same platform to do something differently. Because I think what we've been talking since this morning is about how we work differently to fund development. And I think the examples we've been given here will take us out of the box or without the box, and to look really into development from a different perspective. Thank you.
Great. Thank you very much. I think this gives us a strong starting point on priorities across financing, partnerships, and institutional alignment. So thank you for that. We'll go to the next question. So building on the discussion we just had, which actors would need to lead or support this, and what would make it achievable within that time frame? So you can start.
Thank you. maybe just to follow the thread of the answer to the previous question, if I may, this idea of brokering. I mean, of course, today you would have heard the important role of almost all different types of stakeholders, you know, but then there's a risk that it becomes everyone's business and then no one's business, you know. And I really like what Janet said. I think we need a couple of wins, a couple of really strong stories that actually demonstrate the value, the importance, and actually how private capital markets can engage in development. But there does need to be a leader. There's a very strong political economy here as well, between the way public sector thinks, between the way private sector thinks, the way investors think, and then all the different development agendas. So it can get, the political economy is extremely complex. But I would say, and it would vary in each country, but I would say that this should fall on a government lead ministerial entity that feels comfortable and confident enough to lead the charge and be able to open that translation game and allow for all different perspectives and voices. But the reason why I say the government and Ministry of Finance, because they are ultimately the ones responsible for development, but they also understand the language of finance better than anyone else in government. Now, having said that, if you just look at, maybe I might use the example of climate finance, just as an example. And we had the Africa Climate Summit in Addis last year in October, which was an extremely eye-opening event. If you look, there was a presentation done on climate finance inflows into Africa by the Climate Policy Initiative. It opened my eyes to this, in answer to your question, who should lead. If you look at public revenues, they're always going to be a significant portion, but they're never going to be enough. But when you zoom out and you look at the assets under management by pension funds, it was great to hear Nigeria's story, insurance companies, national development banks, sovereign wealth funds, impact investors, and even multinational companies, the amount of financing far outweighs, overshadows everything that we've been used to in financing development. So I think there also has to be leadership from somewhere in that sector. And now that is a bit uncharted territory. I think it would vary in each country, but I know for sure in Nigeria where to start. Thank you.
Thank you very much. Ms. Janet, would you like to add on that?
Yes, thank you. I will, having concluded my previous statement on the need for doing things differently and building on what Murtaza said, I think one of the things we are working towards now is co-creation. Co-creation, but with somebody on the driving seat. Every government drives the development of its country. But can government do it alone? Again, this time around? Of course, no. So coming from the UN, I take the example of our donor government coordination platforms. So those are the type of the platforms that we will be looking at, but in all of them, government leads, somebody co-leads. The government leads, the UN co-leads. On the social platform, government leads, trade unions co-lead. On other platforms, so it's really something about co-leadership. We need to break some of these systemic barriers that have been blocking, because when we come together at the same table, government has the agenda, ownership. You own the agenda of development of the country, but who else can bring what? At times at even bigger scale. In terms of financing, really, government will define the agenda, but the money has to come from all these pockets that we are saying we need to unlock. So ownership, government, co-creation with partners. Thank you.
Great. Murtaza, please conclude this round.
Oh, sorry, excuse me, Prasoon.
Thanks. So just to complement to what Murtaza and Janet said, that yes, from the government side, we definitely require the push. I guess the major push that would be quite supportive, especially when it comes to from the private sector perspective, and that's also the perspective I'm taking from the AFRSD's point of view. The major part that comes is the regulatory certainty, especially regulatory certainty around three major areas. One is investment incentives for investments. Second is taxes, and third is duties. So if there is certainty around these three areas, and especially that's where I believe the government comes into the play or driver's seat, that yes, they can help in creating an enabling environment that gives the confidence to private sector that if they are investing in that sector, in that value chain, they will have a certain policy environment that they can work with. Once that is in place, then the second partner I here see is definitely the private sector, which has the intention to invest, which has a bankable project, and they would like the financing support. And the third important part, and the last one, is essentially on the financing side, where different stakeholders, be it DFIs, be it commercial banks, be it equity investors, can come in and then help in terms of creating a structure that makes sense. And in this part, I think the mobilization, we have been talking about mobilization quite a bit. Lately, that's where majority of the focus is moving towards from the even DFI community, that DFIs come in, they create an example that yes, this is an investable project. They essentially try to attract the other private sectors to come in and then join hands. And that really helps in terms of using the scarce DFI capital to create an example to bring in other financial institutions or other stakeholders in the play to mobilize more capital in that. So those are, I would say, are the three major buckets where the government comes in, help with an enabling environment that private sector can trust and build their investment case with. The second is actually the private sector that has the bankable project where they want to invest in, and third is the overall financial community that can come in and support those bankable projects.
Thank you very much. I think we're approaching the end of our session. I mean, our time is running out. I wish I could ask you more questions so that you can engage with us more. But let me conclude with a general question. It's going to be two questions, but you can wrap it up for us. So, what would make follow-through more credible after this forum? A clear ownership structure, a follow-up platform, periodic stock taking, or another mechanism. As a follow-up to that, how can the forum's discussion be converted into a manageable set of actions that are both ambitious and realistic? So we can conclude the questions with these two questions merged to be answered. Yes, please.
I was looking at my panel to see if they had anything smart to say, but I'm sure they have. I'll give it a go then. Thank you. Look, I think it's clear from today that transformation is required in this space. I think it's not going to happen overnight, and I don't think a forum can initiate transformation. But what it can do is it can encourage it through learning and open exchange for people to come from different spaces to speak more freely, to ask tough questions where perhaps they may not feel as comfortable in the countries or regions in which they operate. So I think that is the immense value of a forum like this. And I think it's great we meet, I think it's once a year, right?
Yeah.
But this is, from what we've heard today, you could unpack this into 3 or 4 different components of learning. And it needs that regular kind of, I think, more regular injection of learning. So I'm just thinking out loud here, but the learning spaces that I've seen that succeed need a couple of things. They need someone to take responsibility of one sub-area and generate a lot of learning in between those yearly events. And then so the next yearly event isn't us just going back to the same things, but someone coming back and saying, okay, here's how we've progressed on this learning point. So it might be an example, how do we work more closely with pension funds, insurance companies, for instance? Or it might be, and I love your point earlier on the quality of pipeline, how we're advancing on pipeline. There are already a lot of initiatives, but is that learning seeping through? What's the perspective of equity funds, impact investors that we heard earlier? You know, what do they really think? What are they struggling with? Where is it working? So something that's a bit more granular, where we break down the topics, and then there's a partner or a country agency says, okay, I'll lead that, and I'll bring together the experts in that, and then we'll have maybe quarterly conversations or something like that. And I love Janet's point. I hope I'm not stealing your thunder now, Janet. You know, to showcase the examples where we're trialing and erroring, even if they fail. Preferably the ones that succeed, but even the ones that fail, why did they fail? Let's bring it out. Let's bring the learning. What can we do differently as a collective mindset? So those are some of the things I put down. And I think from UNDP perspective, I think maybe you're also looking for what partners are doing in this space. So we've got a forum coming up around the integrated national financing framework work that's active in about 30 countries. And as I mentioned, Ethiopia is the most recent one. So we've got a forum coming up. From this, I think we'll design a session specifically on private finance, private capital, and we'll draw on this forum. So that's something concrete, and we'll invite various people who are interested. I love the question from Uganda. I think it's that sort of forum where we have that more interaction. You know, we hear from countries. So breaking it down in between each year, where those sort of questions and others can respond in a more kind of working way, learning way is what I'd recommend.
Great.
I hope that makes sense. Thank you.
Yes, that's a good way to go. So, Ms. Janet, if you want to follow up on that, I'll give you the floor.
Sure. I was asked a question once, where is the money for development and where is the money for gender equality? And my answer was simple. The money is where the money is. And I think this is unpacking where the money is. Since morning, we've been unpacking where the money is. So going forward, which is a difficult thing, but which must happen, and we don't know how we account for mindset shift. Because all we've been talking about is that we need great shifts in mindsets, great shakes in systems. Across, from private to public, something has to change that is visible. We need to see. The next is capacity. We are talking here amongst experts, but those to make these things happen are not here with us. Where is the capacity to transition from a mentality of funding to a mentality of financing? Do we have that capacity in our various institutions? If we don't, how do we map existing capacity and make it available across to those who need it? And the third for me is accountability. Who is accountable for all what will be discussed here for these 3-4 days? And how is that accountability held accountable? Who is holding who accountable on what? I think those are the key things that will come between now and the end of this forum to ensure that we will not just talk, but that we will translate the talk into works and works into works. Thank you.
All right, Prasoon, I'll give you the last stage.
Thanks. So I think what this forum helped with is to understand who are the different actors and then just what is their role. Usually in these kind of contexts where you have this broad objective, the way it helps is understanding the different work streams, essentially around, say, be it from the regulatory aspect or financing aspect, and then trying to figure out, okay, who are the different players within those work streams, and trying to translate that into, wherever possible, sort of a compact that really helps you in terms of keeping the relevant actors accountable for those different specific work streams. Plus, within the development partners, I think a lot of us are doing a lot of things with, and sometimes there are things which are probably contradictory to each other. And there are resources that are spent over the same thing
quite a bit of times. Sometimes I think would be also helpful once you narrow down to a sector or to a country to understand the mapping of who's doing what. And then based on that mapping, making sure that the resources are utilized in the right way, and also making sure that we are keeping our counterparts accountable, especially in case of where these are government-facing projects. Then in making sure that, yes, all the resources are going towards a direction that really helps in terms of getting the accountability from the government counterparts on the regulatory reforms. Some of those could be potentially next tangible steps in terms of making this more concrete.
I think the key word here is accountability, along with capacity. So thank you for that. Unfortunately, we are out of time. Do you want to add? Yes, please.
For mine is just one last word coming from gender equality and women's empowerment perspective, that we all have seen the gap in funding and the lagging SDGs, mostly those that affect women and girls. To me, all these discussions around blended financing is what, if we take from discussion to the next step, will really step up financing for gender equality. So coming from UN Women, I really want us to take this seriously, mainstream gender in every aspect of this work from the beginning, as we are doing now, so that gender doesn't always become a second thought or an afterthought or something that will come to add on. I am happy that we are having it here and now from the beginning, so that we will not wait until one stage we say, oh, UN Women, can you come and add gender? No, it should be mainstream from now. Thank you.
Thank you very much. Of course, gender equality is a very important aspect, and we shouldn't forget about that. In the interest of time, and unfortunately, because we are out of time, I would like to thank you very much for your insights, for what you told us up here. Like I said, I would have liked to ask you more questions, but for now, we will close in with this. So, Murtaza Duwanji, Prasoon Ragwanshi, and Janet Kane, thank you very much for today. If you please stand up and take a picture for us. Thank you very much. So this has been a very focused and forward-looking discussion. What emerges clearly is the importance of prioritization, coordination, and accountability in translating today's discussions into tangible outcomes over the next 12 months. Thank you very much. With that, we will conclude session 4. So I would like finally to invite Hervé Lado to take us into the closing segment, including a summary of the key findings and outcomes and the way forward. Hervé, you have the floor now.
Thank you so much, dear moderator. We are heading to the closing moment of our day, and let me start with the protocol. Excellencies, distinguished guests, and dear colleagues, the day has been really rich and insightful, with conversations on business initiatives and even presentations and teachings, especially on opportunities with blended finance, with debt swaps, for the acceleration of the SDGs. We needed that as well. From the opening to the closing session, we've explored tangible different shapes and forms in which the private sector is developing innovative solutions to address the SDGs through their strategies and operations. Some conclusions, some solutions and achievements are impressive. Others are disruptive. And most importantly, all are timely. Timely in this SDG acceleration moment. Based on the general agreement, we had that agreement here, that private sector funding is really available, readily available, including in Africa. We have also discussed the de-risking solutions that are already allowing more private capital to flow in, and that could allow more. The last forward-looking panel we have just had a minute ago has crafted a pathway for concrete de-risking opportunities, including in the case of Ethiopia, how to accelerate, the need to accelerate the development of an integrated financial framework for the SDG acceleration. And this can be done, this can be expanded across the continent, showcasing strong wins and successful stories, and even failures, as we heard, can inspire each other in this regard. The next step is to ensure that our takeaways inform the debates and deliberations at the Africa Regional Forum on Sustainable Development starting tomorrow, and that they are captured in the final outcomes of the entire forum. This will support the continuous mobilization of the private sector for the acceleration of the SDGs, including through the high-level political forum in July in New York, and through the Global Africa Business Initiative, led by the UN Global Compact in partnership with ECA and UNDP. The Global Africa Business Initiative is a platform that gathers every year on the sidelines of the UN General Assembly in New York, the African Union, African businesses, African heads of states and governments, the UN system, business leaders and investors to shape and transform the African narrative on investment opportunities, sustainable investment opportunities and achievements. Very soon at the Africa CEO Forum of 14 and 15 of May in Kigali, we will take forward the Gabi conversations on investment and policy reforms opportunities in the health sector especially. And later this year at the UN General Assembly in September, we will pursue the mobilization on KSDG intensive sectors. So we hope to meet some of you there to continue the mobilization for the acceleration of the SDGs. In this private sector forum, the dominant K word has been partnerships, which was actually the purpose of this forum, how to accelerate and enhance partnerships, and which is actually our SDG 17. Finally, on behalf of the organizers, our gratitude goes to the ECA and His Excellency, Mr. Claver Gatete, Executive Secretary, for hosting us today. Gratitude as well to UNDP and ECA for partnering with the Global Compact to create this private sector space within the Africa Regional Forum on Sustainable Development. And deep gratitude to all our speakers and participants, those who were here in person, but also those who were online. Thank you all, and let's all be partnership ambassadors. Thank you.
All right, everybody. With that, we conclude the day. So I would like to thank everyone for joining us today, our panelists, our speakers. I hope it was a very insightful and educating session. We are done with today's session. We have a health break downstairs if you guys want to enjoy some tea and coffee and network amongst each other. We are compensating you for keeping you up this late. So thank you very much, everyone. We will see you tomorrow. We will send you all the presentations by tomorrow, end of day. So you will have it all in your laptops. Thank you very much.
designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these industries grow, Africa needs to address the issues of investment, quality standards, and policies that allow creatives to scale and trade within and beyond the continent. If Africa is truly serious about jobs, dignity, and economic transformation, the creative economy has to be treated as a core source of employment and not a peripheral industry. From garment studios to designers and models, Africa's fashion and creative industries represent a significant source of jobs, economic opportunities, and cultural identity for a growing generation. As these